Hey traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DX Trade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too, but that's not all. By signing up with FX2, you get access to C-Trade. C-Trade is a trading terminal where you can create custom indicators or download ones from the community. Get access to all of this and more by signing up for FX2. So, for traders looking to get funded, you can get 15% off by using promo code A1Trading15. That's A1Trading15. The link and promo code can also be found in the description. Now, onto the show.
All right. Good morning, guys. Welcome back to another live stream. Thank you for being here on this kind of different day than usual. Today is Good Friday, and you may be wondering why stream. Well, it's because we have some big market data. The Forex market is still open, and we have two key events happening today. Despite the stock market and the futures market being closed, FX remains open. Crypto, of course, is open. But more important than which specific markets, we still have a loaded day in terms of market news, and what is, of course, the purpose of this channel. It's to keep you guys informed with the latest. And of course, today we have, like I said, two major playing events. We have core PCE, and we have Jerome Powell speaking. Both of these have the potential to move the markets pretty aggressively. And I also had something kind of cool happen. I am actually live streaming to you guys right now on the new PC. Oh, I can tell because my camera, hold on, let me make sure this is the right camera. Hold on. Let me check. I have two cameras. There we go. It's my better camera. Okay, we're back. We're good. All right. Yeah, so again, we have some key news here coming out this morning. We'll get some inflationary numbers, which despite it being a quieter day, will still be important to the market. In terms of inflation, again, if you're wondering why are certain things closed, the reason they are closed is for Good Friday. So some markets are not open right now. The FX market, however, still open, so we can still watch the effects and kind of look ahead to next week and how these things could perhaps impact gold and commodities and things like that. So anyways, speaking of currencies really quick, I wanted to just update you guys ahead of this. We've got, of course, the dollar index making a move up to the previous recent high. So you can see by looking left, we have resistance up to this level. 104.8 is coming in. And basically, PCE, if it has any surprises, and I'm talking about either hotter than expected inflation, higher expected would be hot, right? And then, or much cooler than expected, both of those scenarios could move the dollar pretty aggressively. Pretty simply, we'll keep this, it's really straightforward with inflation reads for the most part for the dollar. If you get hot inflation reads, right? So PCE is the number today. If that comes out higher than expected, the dollar index could perhaps be a breakout move higher. On the flip side, if this number comes out cooler than expected, it could suggest that the Fed is looking to still cut rates sooner, and that could perhaps back off the dollar a little bit. Will PCE affect the market? It definitely could. The question is, will it? It depends on the data, right? If that data comes out, remember that when it comes to news, this is the expected, right? The expected value is this level. If you get a print that is far away from that expected value in either direction, that's what gives you big market spikes. If you're ever wondering why stocks or commodities or whatever doesn't move that much, they don't move that much on a news event, it's not that the news event wasn't important. It just may be that the number came out pretty much exactly as expected, and so the market was already kind of positioned for that. You have to remember that markets are trying to look ahead at these data points too and come up with where they think they're going to be. So for you to get big swings, you need surprises. So today, again, like I said, in about 10 minutes from now, we will be getting core PCE numbers. And right now, the expected number is for the month over month read to be 0.3%. If you get a higher than expected number, that could be dollar bullish, and a cooler number could be dollar bearish. Now, again, we're not going to see the reaction to certain markets because some markets are closed today, right? So, gold spot price not moving and indices are not moving. So right now we will only really see the currency reaction, which still can give us a picture of what those other things will do as well. I'll give you a really quick example. Most likely, if you see the PCE number come in, really, really hot, right? It will likely cause the dollar to go up, and stocks probably would not like that, right? Same thing with Jerome Powell. If he says something that is taken incredibly hawkish, right? Something that pushes back on this idea of rate cuts are coming, stocks won't like that. Gold would definitely not like that, so on and so forth. USD will go up or down. Tougher, I don't know, right? I've been doing this for many years, and I can tell you that trying to say which way the market's going to go before news is a total gamble. We are waiting for the data to understand better what could happen. We talk about this often, but it's all about the aftermath. At least that's how we approach it on these streams. We are looking for follow through for aftermath moves. Like, let's say if we get a breakout above, like maybe the dollar makes a push, or what I think could happen too is that if you get cooler data, that inflationary number could come creeping lower, which would again be sort of interesting for currency world. How would gold react to a cooler PCE? It's a good question, Lee, because here's the tricky part. If rate cuts are still expected, I was talking a little bit about this with Frank yesterday. If rate cuts are still expected to come despite inflation being where it's at, the only way it really gets the attention of gold, I think, is if you get a real solid spike in inflation. Like if inflation is really going up, then yeah, the market's going to say, oh, they're probably just going to cut twice. So it could move gold, could be negative for gold if you get a hot inflation read. If you get a cooler inflation read, gold's going to pretty much love it, right? But in both cases, even, I think that whether inflation is hot or cold, gold still right now kind of stays mostly bullish unless you get a string of, accelerating inflation. Anyways, here's a couple of charts to look at. Here's the Euro USD, which is, has been trending lower here recently. And the theme here, which has been interesting across the currency world, is that you have these charts that are trending lower despite the dollar expecting to rate cut, right? Or the Fed expecting to rate cut. Why is that? It's because these central banks, if you've been watching, the ECB or the Bank of England, they have also kind of been proponents for cutting interest rates sooner as well. Why has the market been so slow today? It's because it is a bank holiday for certain parts of the world for Good Friday. Although we are still covering the news because, again, we have major news here in just about 5 minutes, which could be market impactful, and we'll see what that could do. Dollar yen here also trending up, but consolidating, of course, today. Again, I think most of the volatility, if there will be any, will be in probably the next few hours here, just because Jerome Powell is speaking later on. Yep, he does. Is the U.S. market going to open? No, it's not. Not today. What's your take on CAD yen? Ooh, I haven't looked at CAD yen in a long time. Let's see if we have any CAD yen neutral leaning bearish on the Edgefinder. Let's take a look. Okay, CAD yen on the daily chart. Yeah, I have not looked at this pair in a while. CAD yen trending up alongside most of the yen crosses here recently. On the 4-hour chart, it kind of looks like it might be forming a little bit of a flag pattern here, right? You have this potential breakout retest could happen, although I just don't have enough conviction on this one, simply because, again, I'm using the Edgefinder as my confirmation bias when I take trades. What I could give you is like Kiwi yen, pound yen, Aussie yen. These are actually getting bearish reads. Let's go look at pound yen because I am curious. Pound yen's getting a strong read on the Edgefinder for possible sell setups. Let's talk about that. So in terms of the Edgefinder scoring here, let's just really quick. I'm going to filter out some yen pairs. For the yen traders out there, we're going to just look at some yen crosses really quick. Also, for regular viewers, you might be able to notice this too. This new PC, it rocks. It's really solid. I like you guys can't hear it in the room, but I can hear under my desk where the PC, for those who are just tuning in, I just bought a new PC. It is a CyberPower PC with a NVIDIA GPU, like 4060 RTX. I don't know what that means, but it was one of the recommended ones for streaming. And I've had really some terrible issues with my streaming process recently. My computer would just basically die on me when I was streaming, because this product here, the Edgefinder, it's a beefy product. I'm not gonna lie, it's like TradingView, right? TradingView and the Edgefinder are similar in the sense that there's just a lot of stuff going on in this screen and it's demanding on your computer. But at the same time, streaming, TradingView, Edgefinder, I just needed an upgrade. So what's fun about this is that the PC below my desk is like humming. It's like a little engine down there. It's so cool. I could hear this little like airplane going on under my desk. Sounds like a jet. Link for this software. If you'd like access to this software, we have a trial that you can do. It is a 30-day trial that you can get some information about by applying on our website here. We'll drop the link for you if that would be of interest to you. Might be a good time to get set up over the weekend, since it is, again, markets are going to be a little quiet for the next few days. If you'd like to try out the Edgefinder, here is the application form to do so. Fill out this application. Someone from my team will send you some information on how you can check out the tool for yourself. It is not a free tool. We have put blood, sweat, and tears into it. So it does come with a price, but you can try it out if that's something you're interested in experimenting with. Am I not going to be able to trade the gold news? No, I'm not trading gold today because gold is closed. Gift me your old PC, Nick. You know, I've been thinking about what I'm going to do with it. I don't think I'm going to give it away. We will have use for it in the business. There's enough people and projects and stuff. I'm just not sure what I'm going to do with it yet. But it is sitting out there in the main room waiting to be used. So let's keep going. So I mentioned I wanted to look at some yen crosses: pound yen, Kiwi yen, Aussie yen, Euro yen. What is the bearishness all about on the Edgefinder? COT is a big one, which, this is going to be something to note. Edgefinder users who are with me hanging out, do not be alarmed if COT data doesn't show up in proper time. I think it's probably going to be a few days delayed today just because of the bank holiday. By the way, we were 1 minute out, so let me, go back and respond here. Keep an eye on this for about 30 seconds here. I'm going to pull up the dollar so we can get a reaction, see if anything moves here. Pull up the 15-minute chart. I'm going to go 2 screens so I can also look at the euro. Here's the euro, and we'll go ahead and get that set up. Okay, Euro USD here, dollar index. Let's go 3. Why not? We'll go 3. Where's the third? Okay, I'm going to be too late. We're going to go ahead and do breaking news here. Coming in. All right, guys, and let's see if we get any reaction here for core PCE. Okay, we're getting the numbers now. Okay, here it is. Core PCE came in as expected. Goods trade balance, some other things here, things that we don't really pay too close attention to. So, okay, so news came out essentially as expected. So this is why you're probably not going to see a big reaction to this. Yeah, so there you go. You can see the euro blipped lower and just immediately reversed. So now we're seeing a little bit of drive to the upside here on the euro. Very interesting there. Let's also pull up the pound on the side just to see what the pound USD driving up as well. You know, it's not a big move at all, but as you would expect, if numbers come out exactly as expected like that, you're not going to usually see huge moves in the market to respond from that. Dollar yen, euro dollar, making some pushes. So we'll see. Inflation's still sticky, and month over month, again, staying the same. Don't forget options. What is your next stock ETF to trade? Mike, because the stock and options world is closed right now, I don't have any trades for today. But if I do take any trades, I'll share them in Discord. If you are in our Discord channel, it'll be shared in there. If you're not in the Discord, we'll drop the link there for that. Okay, so guys, I'm going to probably, because now we are seeing some movement on euro dollar, I'm going to take a look around, see what else we can see. Dollar Swiss, dollar CAD. Look at that, dollar CAD making a drive lower here recently. Aussie dollar making a bit of a reversal here. There's a Kiwi, you know, 11 pips, not very much here at all. Bitcoin's down 1%. And by the way, there is the link for the Discord if you want to join it. Any recommendations on futures prop firms, Nick? I really cannot recommend one. I don't trade futures myself, although Webull is bringing futures to their platform. I may learn, but for now, I don't trade them, so I really can't suggest anything futures prop firm wise. I also don't trade prop firm in general, so in terms of that, I can't really give you any like past experience ones. Yep, euro dollar, dollar yen, pretty much erasing the moves that they did make. And this is why, guys, remember that when we are talking about news, right? News, it's all about expected versus actual. So if the actual comes out way over here, then yeah, you're going to see a big spike. If the actual comes out way over here, yeah, you're going to see a big spike because the market suddenly says, oh, we're all standing over here and the popsicle stand is all the way over there. Everybody rushes over there to get in line, right? That's why the market moves, right? It's a simple, stupid analogy. But think about this way. If everybody's standing in line right here and then the ice cream or popsicle, whatever stand pulls up right there, nobody's going to move. Nothing happens, right? Everybody stays in line at the current spot. So silly analogy, but that's the concept is, again, it's all about expected versus what actually comes out. Which broker to use in the US? I have several brokers that I'll share in the description of this live stream. You should be able to see it right now. And if you would like to use the one that I use Webull to trade directly on TradingView. It's very nice. So I can like watch my positions, etc., right there in TradingView. We'll drop the link to Webull. That is the broker that I use. So check that out. Okay, so I wanted to come back to this yen thing we were talking about. What's your opinion about TFT? Coming soon. I got a video coming on it. I want to talk about this yen stuff. Why are the yen pairs getting a lot of bearish readings on the Edgefinder? Well, the commitment of traders data was a big one. Retail positioning, pretty mixed, not really across the board, not really telling us too much. Seasonally, pretty mixed. Trend, kind of up. So that doesn't help us. It must be in the economic data section. And herein lies the answer, okay? So in the economic data section of the Edgefinder's output set here, GDP is underperforming for other places compared to the yen. So it's actually yen strength that is making some of these other places look less attractive currency-wise, okay? So when we compare GDP numbers, manufacturing and services PMI numbers, retail sales, inflation, employment data, and interest rates, most of this is favoring the yen right now, right? That is what we are seeing in the economic output section of the Edgefinder. So if you're wondering why yen bearishness is coming into the picture, it is not really the sentiment and technical components that are really screaming bearishness. It's the economic data. Noticeably, the US, this would actually make a lot of sense. The US, in terms of economic data, doesn't look too bad compared to Japan, because the US economy has been kind of outperforming a lot of these other places too. That's why the Edgefinder is smart enough to recognize, oh, okay, US data and Japan data, there's not like a huge winner here. So we're going to stay neutral, right? Also, I can't stop raving about this, but the new PC just feels so much better. I'm just feeling so much better about it. How do you think gold will react? I don't think it will change much if you're talking about the PCE numbers. Now, we still have potential volatility later on today with Jerome Powell speaking. This could certainly be a market mover, right? But euro dollar up slightly. I mean, if you're somebody who's watching gold and like you're really a gold person, you probably just want to watch the euro today, as it will maybe give you some similar correlation right now. It's not great though, because recently the dollar and gold, although usually negatively correlated, there's been not as much of that recently, right? I'll show you what I mean by that. What is your favorite pair to trade? I don't really have a favorite currency pair. I mostly trade gold and indices, but if I'm trading currencies, usually it's just going to be like euro dollar. Like I'm just trading basically on the dollar. But maybe dollar yen. Dollar yen probably is my favorite one. Dollar yen or euro dollar, one or the other. Anyways, so check this out. This has been kind of confusing. So here is your 4-hour chart compared to the 2, right? Usually, not all the time, but usually when the dollar's up, I gotta sneeze, hold on. Usually when the dollar is up, gold would be down, right? But that's not really the case right now. Right now, what we see is that both are advancing higher. And so why is that? The reason for that, I've gone over it a couple times in my videos, but to keep it kind of simple here, the reason is because the dollar looks strong, not because the Fed is hawkish, but because other central banks are coming out more dovish than the Fed. So suddenly the dollar looks relatively strong, but all central banks are starting to look dovish. All central banks looking dovish, not all, but almost all, right? Most of them, very good for gold. So there are these things where if you understand fundamentals, these things won't be so confusing to you, right? A lot of times these are really confusing concepts. Why the heck is the dollar going up with gold's going up? Well, I just explained it to you. The dollar looks strong only because the other currencies look weak because they're going to cut rates sooner. That's the idea of the market. All of the central banks racing to cut rates. Well, gold just loves that. That's why gold is super bullish and why we've stayed long gold, right? So I want to say something, a lot of times with these streams where we have like a quiet day, people will be like bored of the markets. But I want to just invite you to, on days like this, I love days like this because it gives me a chance to work on things, right? Because I don't have to kind of like worry so much about like constant market movements. It's the same reason why I love like weekends for if I want to get something done in my trading. It's very nice to be able to do that. You get some time to yourself. Also, I do have a video coming out later today. I filmed it this morning. It's on its way, but we've got coverage for the TFT situation, right? Why is gold stuck? It is Good Friday. Futures markets are closed. Currency market is still open. Futures market is closed. I feel like I'm going to answer that question 700 times today, and that's okay. Because I know somebody just pulled into the stream. They didn't hear me say that, so I'm not complaining. But I apologize to other people who hear me say that 14 times. Why'd you choose FX2 to endorse? I like FX2 because I really like the people there. They really have been impressive in the industry, where I've seen like a bunch of prop firms, they lingered around trying to sell to US clients as long as possible. FX2 immediately did what I thought was the right thing. They shut off accepting US clients because there's gray area there. As soon as there was gray area set up by, nobody knew if US, like nobody knew if there was right or wrong selling to US clients until my Forex funds happened, and everybody kind of pulled back, but continued to sell to US clients. FX2, what I really liked is they immediately shut off US clients. And I thought that was commendable, because from a business perspective, that's got to be, I know by speaking with them, that was hard, right? That's not easy. It's not easy to cut off one of the biggest, income streams for any business is the US, right? Or for most businesses is a lot of US company or traffic. Look at that. Euro's actually making a bit of a move here. That being said, I really respected that. And I had a video. If you'd like to know more about the firm, I put out a video yesterday. You can find it on my channel. Just a disclaimer, it does not accept US clients. And I don't have any prop firm that I am partnered with that accepts US clients at this time. So anyways, euro dollar, let's see, what is that? That's a 25 pip move. That's not too bad for a quiet day. DXY, Euro USD. Let's go look at dollar yen again. See did that keep dropping? Kind of. Yeah, look at that. There's a 30-minute chart. 15 pips. Very interesting. Cedric, can you do a podcast? I literally did a podcast with their founders yesterday on my channel. Why do you not want to short dollar yen if the Bank of Japan wants to raise interest rates? Marek, the reason is because I don't really take trades unless I get enough confluence to take trades. So just because the Bank of Japan says they're going to raise rates, here's the thing that a lot of fundamental traders, the mistake they can make, okay? A mistake that a lot of new fundamental traders will make is they hear fundamental news in an article or newsletter, and they just jump over to a chart and they take a trade. That's not actually, in my opinion, a great approach to fundamentals. If your fundamentals is just watching videos and articles, I don't think that's actually a very appropriate approach. Because I used to do that. I used to do this process by hand. And you can do this sort of thing by hand if you want to. You can literally write down all the categories that we look for and do this by hand. And let me tell you, it's going to take you so much time, because I used to do it. I used to do that. I used to, in fact, you guys might know Frank. We used to do a weekly report that we would share on our newsletters, doing all of that stuff by hand. And Frank and we both kind of resented it because it was so much research. You'd have to go like pull up 13 different, articles to get all the information you need to write the report. And then we'd share it with our subscribers, which was great for the subscribers, but it was so much work for us. So we set out on this whole campaign. That's the whole reason we built the Edgefinder in the first place. It's fundamental data is only good if you have a good plethora of it in front of you. You have to be able to source a lot of fundamental data quickly. And if you're not doing it with software, you're probably not going to do it all. It's too much work. So we built a tool that basically pulls all of the data that we wanted into a single hub, calculates algorithmically bullish and bearish readings for it. And that's how we get the setups that you guys see on the streams and videos. It's been a full process. We are just going into next month will be 2 years celebrating the Edgefinder. It's 2-year anniversary, which is really exciting. And it's been awesome. Here's a quick look at major currency pairs. Pound dollar getting bearish readings, Aussie dollar, Kiwi dollar, dollar CAD getting neutral. So no bullish readings on the majors. Let's just really quick take a look at this and see what we're looking at. So pound USD, I wanted to pull that one up. Pound USD. Let's go full screen, actually. So we'll go full screen, GBP USD. All right. Okay. So pound dollar, while it probably won't move very much for the remainder of the day unless Jerome Powell says something big, which he is still speaking. So we're still technically live today, even though it's a quiet day. It could still be volatile as well. Suddenly, right? Area of interest would be for me if price were to poke up into this resistance zone, this 50% retracement, especially with Edgefinder confirmation. I don't mind that trade. I think that could be an interesting one. Perhaps this pound dollar uptrend has kind of cracked, and that might actually even line up nicely with this trend line here. I don't know. We'll see. Maybe a little bit of a pullback could come into play. Yeah, it might be interesting. So pound USD, Aussie dollar, Kiwi dollar. Let's take a look at those really quick. AUD, USD. Also, I've been talking about the Edgefinder for a minute. If you are just tuning into the stream or you're newer to streams here, we mentioned it earlier, but if you would like to try out the Edgefinder, we'll drop a link here in the chat for you, which will allow you to apply right there. Try the Edgefinder. You can apply, and someone from my team will reach out to you with some details on how you can get 30 days access to the Edgefinder and see if it fits your style. Again, it is not a free product, but we do offer a way for people to check it out for 30 days, see if it's right for them. Okay, so Australian dollar on the daily chart doesn't have a very pretty trend, to be honest. But on a daily perspective, if you were to get like a break of structure here, this could be interesting. Again, that's a daily support level right now. But man, I'm telling you, this PC is so much stronger than my previous one. I feel like maybe a lot of you guys who do have PCs are like, you might resonate to this, but once you upgrade, it's really hard to imagine going back. Because this thing is just like, I'm not seeing any lag on anything I do, whereas with my previous computer, it would like, it would struggle certain times. Anyways, Australian dollar, this could be interesting. Also, this would probably line up, not for certain, but it could also line up with a sell-off in the indices. If you think the indices are going to sell off, a lot of cases, the Australian dollar typically follows, as it's a bit more of a risk asset, right? AUD. So, yeah. Can you send your old PC to my address and don't uninstall the Edgefinder? Nice try, but the Edgefinder is smarter than that. It's not even a downloadable software. You could go to this link. If I sent you this link, you still wouldn't be able to access it unless you've purchased a license. So it is a by your email kind of thing. So yeah. But if you're thinking about it, it is worth the money. I'm telling you, we've worked so hard to build it. It's a wonderful product. And I'm not just saying that because we built it, but genuinely, so many traders are using it to their advantage to find better setups. It's a good tool. I've had one PC for like 12 years and then changed for a new gaming PC. I was just turning it on and off because I was so amazed that it just starts in like 3 seconds. So I have a quick story. I had a terrible laptop for like most of my life, but all my friends wanted to play like PC games, and I never had anything good enough to play PC games on. I just had a junky laptop. And so I was in the same boat forever. I'd like turn it on, and sometimes it would get so worked up that I couldn't get it to shut off. Like it was that bad. Like the thing, I would have to hold the power button down for like 30 seconds. And then eventually it would just like die. Like it sounded like it just got executed when it finally got turned off. But anyways, what's funny is I was trying to play, I think it was Fortnite with my wife's younger brother, and he's young. He was playing Fortnite and I was playing with him too. And he was at home on his computer, and he's got the same problem that I had when I was growing up. His computer cannot play Fortnite, and it was just, I felt bad for him. So I don't know. I don't know if I should be able to give him a computer because it'd have to be up to his parents, but maybe I should just give him that computer that I just had. It could play basic games. I don't know if it could play Fortnite though. Fortnite's kind of heavy. I have another PC at home, another kind of game. Well, it is a gaming PC, but it's a little bit older, and it what was I gonna say? Yeah, it basically just struggles with still some of the newer games. They're just so heavy. But I just don't really play many games. But for streaming, it's very nice to finally have like a good setup for this stuff. You would think with, you know, the number of years I've been doing this, I should have just had a good PC a long time ago. Why do you have TFT in your name? Rest in peace. I have a video coming on TFT today. Sad news for anybody who's been funded with them. Is your CyberPower a personalized spec PC? No, I basically just bought the most popular one on Amazon for streaming that people were recommending. I don't know a lot about PCs. However, I knew enough that I knew that I shouldn't just cheap out and go on the low end. And I didn't spend an enormous amount of money. It felt enormous because that's the most I've ever spent on a computer. I spent $1,400 just on the PC part. Now, of course, I have all the other, you know, I have like a ARM and monitors and all that probably run another $500 or $600 for everything. So my setup is, but it's gotten an upgrade. My previous PC was like a $600 or $700 PC. So I doubled it, and it is worth, I can say so far, it's already worth the money. Because if I'm going to be doing this, right, guys, like some of you guys have watched my stream for years with me. I know many of you guys just by name that show up and hang out, and you've been trading yourself for years, just like I have. And, you know, you got to think, if you're going to be trading for a long time, I sound like a PC salesperson. Like if you're going to be gaming or trading or doing something like that on the longer term, you might as well just get a great setup and use my promo code right here. No, but it is a worthy investment. I think if you're a trader, if you're a gamer, if you're a streamer, you know, any of those things. Have you ever thought about opening up your own prop firm? You know, I've joked about it in my office, but no, I really don't want that. If you think for a second about being on the other end of the prop firm's business, is there a lot of money to be made? Tons of it. Tons of money to be made. The problem that I have with it is not that all prop firms are bad, but the business model that makes the most money seems to be the most predatory. And I don't like that, right? So I like the theory about prop firms. I think, you know, if I were to start a prop firm, I probably would be like as moral as I possibly could about it. But I just don't have any interest in that. To be honest, in terms of like allocating capital, I'd truly just rather trade it myself than hand it out to people on the internet. And I feel like most people would agree. Like, do you want to hand out your trading capital to random people on the internet? A 30-day trial, does that, or like a 30-day like evaluation, is that really enough to truly qualify somebody with your hard-earned money? I don't know, right? That's where I'm like, nah, I think I'd rather just trade my own money and do my thing. And you know, nothing to say that all props are bad, but I do think that, you know, if you're a great trader, why start a prop firm, right? Doesn't actually make any sense, because you should just be able to trade your own capital and manage it properly. Why would you need to allocate it to other people? So I sometimes you'll see prop firm people being like, well, I also trade too. And I'm like, okay, but why are you handing out all your capital then, right? Anyways, yeah. How did I meet my wife? In high school. Like almost 9 years ago. It's kind of crazy. Time flies, man. Okay, guys, we got Kenzo in the building, so I'm gonna just really quick. We're gonna take a break and say hello to Kenzo just after we thank our sponsors, and we'll be right back. Check this out. Hopefully we
Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering a 7-day free trial and 30% off of your final subscription. If you're interested in giving it a shot, there's no risk. Why not? Use the link down below and the promo code there, A1Trading30 for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below.
All right, and we are back with Kenzo. Hey Kenzo, how are you?
I'm doing great, thanks, and you, man?
I'm doing well, and Kenzo, I was just talking about before you hopped on here that I got a PC upgrade, and I'm hoping also that sometimes when you're on the stream, or any guest really, my computer for some reason just works a little bit harder and creates a little bit of latency. So I'm hoping that actually maybe helps our conversation. So you can hopefully hear me okay. I can hear you well so far. So I'm glad that you're on the show here today.
Yes. I'm surprised. Today it's very clear because most of the time I thought maybe it was my connection, but every time my connection was much better.
Yeah.
So yeah, that's a good thing because I shared something there, but I don't really see anything going slow, which means it was on your side.
Yep,
that's great. That's great. So yeah,
this is a little bit better going forward. Now, Kenzo, we have today. Of course, today is a bank holiday in the U.S., but we still had some key economic data come out. PCE came out pretty not surprising. It came in line with expectations and sort of moved to the currency market, which is still open, but of course, futures market is closed, so we are not seeing price movements on gold and the indices. But despite that, you typically remain on the higher time frames anyways. So I'd still love to get your thoughts on things like the NASDAQ and gold, et cetera, going into perhaps next week. We can prep a little bit for then. What are you watching? You've got NASDAQ pulled up. Do you have any trades open or possible setups that you're looking for on the NASDAQ?
Yes, actually on NASDAQ, I've been holding the market, I think, since around this level. Mm-hmm. So unfortunately, it's been playing around the same level. So I've been expecting it to go up. As you saw, USD was going up. Also, S&P, it was going up. Only NASDAQ, it was the one that it wasn't performing very well. But I think maybe we have few factors that affected NASDAQ. We have the DOJ that is starting to sue Apple. That was not really good.
Yeah. Mm-hmm.
But over time, I think maybe that will just disappear, and I think we're going to see the market going up maybe next week.
Kenzo, you mentioned Apple there with the Department of Justice. So for those of you guys who trade indices or understand it, one thing that I always appreciate about Kenzo coming on the show, Kenzo, you always bring with the indices, not just the indices themselves, but also what's going on underneath. So you mentioned that we've had some drama in Apple stock. And yes, of course, if you guys trade SPX500 or S&P futures or NASDAQ or NAS 100, whatever you trade, if it's an index, right? The index is a basket of stocks. And those stocks, especially the big ones like Apple, if they have bad news, sometimes it can be really useful to understand that. I actually agree with you, Kenzo. I think that this news in Apple could be overdone, yes, right? We're seeing some concerns about The Department of Justice has basically accused Apple for having a monopoly on smartphones and their whole environment. They think that the iOS is monopolistic and all this sort of stuff, and
Yes.
that has been creeping shareholders out of their position in some way because of what that could mean in terms of costs or perhaps any even legal changes that have to make or happen. But I kind of agree with you. I think that it's not going to really. We've seen this happen in the past with big companies, but like Microsoft and things like that. They've had these, oh, you're in a monopoly accusations before. But it does seem like you said that right. I think that they usually kind of
Yes.
shrug it off over time, and the market says, whatever, slap them with a fine, and let's continue to churn out money. These things are cash machines. That being said, Apple's
Yes. Yes.
growth has been a little slow. So I am curious if we can see a bit of a turnaround story. And to your point, if this lifts, so will the NASDAQ and the S&P, right?
Yes. Yes. So on that, while we are still on that, April, I think they're going to present their case or some. I think it's this week, maybe Wednesday, something like that. That maybe might be positive. Maybe we might see some very good reversal as soon as possible. So yeah, I think it's not really a bigger of a deal, even though they can actually try to neutralize them one way or another. I think they already have a bigger fan base, so it's not gonna be easier. Even if they change here and there, I don't think I will see actually Apple just going down aggressively. So yeah, that is just those things. They actually always happen.
Yeah. So it will be interesting to see. There's been, a couple names in tech. Another one is like Adobe, right? ADBE. This is another big kind of US tech name that has sold off here recently. And I know I asked my video editors what they use, and they love the Adobe products. And I think a lot of people really love the Adobe products. So it's kind of interesting to see 23.5% down on this company. If it
Whoa.
keeps going down, I kind of like the company. It might be interesting to watch it going forward.
Mm.
But yeah, I think you're getting some sell-offs here. I think also what's been interesting too is I think that if the market's going to rip, if it's going to continue to make its move to the upside, it needs its leader to continue to run.
Yes.
I'm a history kind of guy, Kenzo. I like history a lot, and a lot of times during like history, when like
Yes.
the big founding leader of a company or not a company, like a country or a company or a any sort of establishment, when the leader is no longer in the picture, usually it results in some drama, right? Sometimes the followers can pick up the pieces and continue the rally, but most of the time there's some struggle, like when a Roman emperor would die or something. There's a big
Yes.
fight
Yes. Yes.
after that. But what's interesting is in this rally, the reason I bring that up is that Nvidia right now is the leader of the rally. And if
Yes.
this leader of the rally drops, can the market rally continue? I think in the short term, the answer would be no. But if this can continue to push higher, then the rest of the market probably will too. It's really why Nvidia, I think right now, is like the whole, it's putting the whole market on its back right now.
Exactly. So, and that while we are still on Nvidia, I think Nvidia was going to be maybe 2 times that if some of their AI was also sold in China. It was going to be a different story. I heard that they were still doing a short like a medium performing also
Yeah.
AI like GPUs that can go to China, but we know this US and China tensions. But I think at the end of the day, if they can actually continue able to produce those GPUs that they can go to China
Yep.
based on those AIs, I think we're still gonna see some very crazy push. Also, AMD is also on the same page. Intel is trying to catch up. So it's not actually one company. Currently, Nvidia, I think it's 80% market share of this AI thing. But maybe next year, the next of next year, Intel, AMD, and the other ones, they will try to catch up. But that will actually help this push of AI move. It's not actually only on Nvidia. even the other ones, they will try to catch up. And that is actually good because now companies, they can have alternatives which are actually affordable. At the end of the day, that will keep pushing the market to go even higher.
Yeah, and Kenzo, you mentioned a lot there that was worth mentioning, but I wanted to add to your concept here with the Dow Jones. So the US 30 has done, it's actually outperformed the last few days. And I would actually say part of the reason for this is that we are now really, it seems like, closing in on rate cuts. And if rate cuts really do start to happen, I saw something that was really interesting. It was a study about the performance of different sectors following the first rate cut.
Yes.
And following the first rate cut, the sectors that typically perform, and again, I don't have the stats in front of me, but just from the top of my head, from memory, a lot of the value sectors typically performed well following rate cuts. Because during rate cuts, once the Fed starts to cut rates, the question will be, are they cutting rates too quickly? Are they cutting rates not fast enough? Is it because the recession is coming? Is that why they're cutting rates? Do they know something we don't know? So some fear will creep in, I think, when rate cuts actually begin, because now that news is behind us, like the right now we're in the rumor phase where it's like rumor of rate cuts. This is exciting, but then when you actually start to it's like when you have a gift under the Christmas tree. It's very exciting before you open it. Sometimes you open it up and it's like really exciting. Other times you open it up and it's not what you were really hoping for. So I think that's where the Dow, as you mentioned, actually could outperform. In my opinion, I actually like the Dow a little bit more than the NASDAQ and S&P in the event that we actually get rate cuts, because some of the more safe areas of the market, stable, big companies that are in the Dow, could do well. Do you agree with that, or do you think stay with NAS?
No, actually, you're right on that. So mostly when we start to talk about rate cards and stuff like that, you will see US30 performing very well. Also, sometimes also S&P 500. So on NASDAQ, it's actually quite too specific. Actually, tech companies, they are afraid of this news. So they are not actually stable. So if you want something which is quite stable, I think US30 it's actually very, very safe when you trade. Yes, sometimes it can be aggressive here and there, but for this past 2 weeks, you can see it was performing very well. These moves were quite clear. I don't think this was going to confuse anyone. And with the rate cuts, most likely we will see Dow Jones trying to go up. Nasdaq will try to come and catch up with that. Sometimes the move can be aggressively, very aggressive, but most likely already Dow Jones will be way far, you see. Even before when they were talking about rate cuts, I think it was around November when they started to talk about rate cuts. I think it was November, December. US30 was the first one to actually break out. If you still remember around these levels, then NASDAQ did try to catch up. So on NASDAQ, the market was just consolidating around this level, and US30 was already going, you see. So it's safe because there are banks in US30. So those banks, they actually feel the pain of rates when they are high. Yes, sometimes they can make interest rates, but the problem is they lose customers because now you can't take loans because they are afraid of the higher rates. You see.
Yeah, and Kenzo, I want to show you this chart. It's fascinating. To your point there about how you just mentioned that the Dow Jones was the first one of the three to actually break back to all-time highs. And many traders who are with us will remember that, or they might have this memory that the NASDAQ just outperforms, that the NASDAQ is just the best one. But if you go back a few years, and I want to show you this to everybody who's watching, look at this. If we started back on, let's just pick this date. Let's just assume for a second that on this date, November of 2021, if you had bought the NASDAQ instead of the Dow, you went long NASDAQ. What this chart is the QQQs, which is the NASDAQ, in proportion to the Dow Jones Industrial Average. When you compare the two over that period of time, the NASDAQ actually has underperformed the Dow Jones.
Yes.
So everyone remembers during this run, oh, the NASDAQ is just better. So if you only ever looked at, indices in the last few years, and many people have made this mistake, they've only looked at indices recently and thought, oh, just buy the NASDAQ, it's just the clear winner. But recency bias is super dangerous in index trading because, again, the Dow Jones over the long period of time, look at this, you can go even further back over the very long time. Neither one of these has massively always outperformed. Now, for a lot of the stretches of good times in low interest rate environments, the NASDAQ has outperformed. But over the very long term, the Dow Jones seems to be a pretty solid bet just as well. So I don't know. What do you think about that, Kenzo? Do you think that there's possibly a bit of a rotation back coming? Or do you think the NASDAQ could continue to outperform? That's the question. I guess we keep coming back to that same idea. But if we start to see rate cuts, is it possible that the Dow actually kind of fires back and continues to rally too?
Yeah, I think for now, whatever that we have, I think is gonna actually we are going to focus on the rates, and most likely when we are talking about the rates, we will see, especially Dow Jones is gonna go up. NASDAQ mostly it will try to catch up after, because remember there's this conferences and stuff like that, a smaller negative that can actually affect the movement, especially on NASDAQ. Plus, we have this tech news every day, quite different from what we have on US30. So I think this might be a very nice, actually good news for S&P and US30 to go actually aggressively high, as they don't really have this problem of breaking news every day. So if they can actually cut the rates, that will be some very good news. Plus, the market already priced on that. I think the market already is trying to go on that direction. But the problem is, what will be the next step? What are we expecting after? Are we expecting them to cut the rates or something like that? Sometimes it's possible. Or maybe they might not really cut. Because if you still remember last year, they did pause with the rates. Everyone was happy. Then the other second time, they did increase the rates. And they said, why didn't you just increase the rates last month? They say, oh, the news were positive. So even now, I think we might have quite similar thing. They might cut the rate, or the other month, they might just pause them and say, no, we will continue watching what's really happening with the news. And that might be a bad thing, because it seems like actually they are not actually confident with the rates, and only those statements is going to affect the way we see the market. We might see some aggressive reversals, even though they did cut the rates, because they can say we can cut the rates now, but maybe next month we think we are going to leave them like that. Still, the rates are higher.
Yep, you could have a hawkish cut. It's possible.
Yes.
So you're right. They could say, it's kind of like when companies have good earnings, but they forecast for not as good ones in the future. A quick example while we are on that subject is Palo Alto Networks, a stock that I think is pretty cool. They do cybersecurity stuff. That's exactly what happened. They actually beat their earnings numbers, right? They beat their earnings numbers, but they dropped massively, like 30% in a single day.
Whoa.
There's a huge drop. Why did that happen? Well, it's because the guidance going forward was lightened. So the Fed could do something similar with interest rates. They could cut their interest rate and say, we're going to cut, see how it goes, but we're not sure if we're going to cut again. And that could be a hawkish cut, which would be really interesting.
Exactly. And I think it's not the first time the first time they do that. Actually, last year they did do something like this. Even though they did not really cut, they were increasing, pausing, and that was actually bad, because you can still see that they don't really just want to increase. Actually, they want to increase, but they're just trying to balance things with the market. They don't really want to see the market crashing, you see. So even now, because we're expecting them to increase the rates, to cut the rates, yes, they might still cut the rates, But the question is, what next? Because we're always thinking about the next story. Already, mostly when we reach those times, the market already will be priced on those rates. So when it's time for the next or whatever that we will be expecting, you might find that it's not really interesting that much, and things might still go lower. Because mostly for us, let's say people who actually understand the markets, they are now pricing or buying the stocks according to what will happen next. So, which means if they're going to cut the rate, that's good. But what will happen that day, we might still have an aggressive sell. That's what happens mostly on the fundamentals. You might find that the news were positive, but the market is moving in the opposite direction. And it happens in fundamentals most of the time.
Yep. No, you're exactly right, and that's why we have you on the show, Kenzo. You know your fundamentals well, and I just want to say to everybody who is hanging out here with us live, Kenzo has his own YouTube channel. It's called Extra Hot Forex. It is linked here in the chat as we're speaking. I would ask you guys to do us a favor here on the show production side. Make sure to go show some support to Kenzo and his YouTube channel, which again has been linked there in the chat for you, so that you can go show him some support. It would again also be helping out our channel, because we bring people on like Kenzo and others, and they come on voluntarily. Kenzo's adding to the community here, just helping out people who are interested. So if you'd like more of his content, again, find him on his channel. Kenzo, thank you very much for coming on the show today, and we'll see you back next week.
Thank you very much, man. I'll see you next week.
Okay, see you, man. All right. Always good to have Kenzo on again, guys. Very, very knowledgeable guy. There's not that many. There's a couple of people on the show that we have on a regular basis, but there's not too many people that I feel like I can talk about pretty much anything fundamentally, and they're right there with you. And that's awesome. I really appreciate having Kenzo on for that reason. Exactly. Same thing with Chris Pulver and Ivan. There's several people who can fundamentally kind of go the distance. So I always appreciate having them on. Kenzo made some great points about some individual stocks and how they can impact markets going forward. We talked a little bit about NVIDIA, etc. I hadn't really talked about gold. And even though gold is closed today, the futures market's closed, I do want to just give you guys a little bit of coverage on gold, give you guys my thoughts. In terms of, let's see, we'll add metals here for a second. So gold is actually getting a neutral reading on the Edgefinder right now. And for that reason, all I'm going to do is, I mentioned wanting to potentially add to my trade. I mentioned wanting to potentially add, actually, let me just get rid of Forex Factory really quick. So I wanted to add at this pullback here. I talked about doing that, but I don't think that I'm going to do that unless Edgefinder confirmation is still given the thumbs up. That's kind of my rules here for adding to a trade. I don't mind adding to a trade, especially one that I'm in a winning position. I have 2 different winning trades on this one right now. I wouldn't mind adding to my gold trade if the Edgefinder was giving us, a solid confirmation. But obviously, the gold market is closed, but currency's making some moves here this morning. Bitcoin's been all over the place today. Now it's down just about 0.8%. Currency world, let's see what the dollar has done here since we last looked at it. Dollar index, look at this, kind of interesting. On the intraday candles here, you can see we spiked up here, retested up into this previous range here, and then sold off. Take a look at the euro really quick. There's the euro. Look at the euro. Euro is making a bit of a move here. Pound dollar. Look at dollar yen selling off. Pound dollar. Look at pound dollar. I mentioned earlier, this might be interesting on a sell side entry if you get a poke up into this 50% retracement. So again, although it is a quiet day, there's still so much volatility here in terms of potential news events. Jerome Powell speaking earlier could move the markets. We'll just have to see. In the meantime, I think Frank is going to share some wisdom with us as well. So real quick, we're going to just take another break, thank our sponsors, we'll take a sip of water, and then we'll be back with Frank in just a moment.
Attention A1 Trading Show fans. If you're looking to connect with other traders around the globe, consider joining our Discord community. Inside of the group, you'll be able to join our chat rooms, check out our educational material, our coaching webinars, and more. Within the group, our top traders share their trade alerts, which will send notifications to your phone or desktop whenever we take a trade. Our trade alerts come with entries, exits, and full analysis with every trade shared. This is not a blind copy signal service, but instead offers an educational way of looking over the shoulder of our experienced team. For fans of the show, we're offering major discounts for a limited time. To claim your discount now and join the group, click the link that's just been dropped in the live chat, which will connect you to one of our trained support reps here at A1 Trading. Again, click the link that's just been dropped or find the link in the description of this live stream and you'll be connected with someone right away. Now, back to the A1 Trading Show.
All right. Hey, Frank, how's it going, man?
Pretty good. How are you?
Pretty good. Did you get some of those donuts?
I did.
Nice.
Very good.
So I brought some Munchkin Dunkin' Donuts to the office this morning. Frank, here's the real question. Which flavor do you like the best? You got like the glazed one, the chocolate glazed one, and the blueberry one. You like the blueberry?
Oh, yeah. Blueberry is the top one.
I'm glad you said that. That's my favorite too. It's pretty
That's like everyone's favorite, I think.
Yeah. Well, when I was doing that, I should have just asked for like a full box of blueberry. That would have been crazy. But I didn't think about it when I was just like, just fill it up with whatever. She's like, okay.
Yeah.
But anyways, Frank, I was just looking over some of the new charts here. And for some of the Edgefinder users, we've been building a lot of new features. But Frank, tell us a little bit about this these new PMI data charts, the retail sales charts. I mean, obviously, we know what that is, but what was your thought process? Because you were kind of the one building this stuff behind the scenes.
Sure. So we added all these new charts to the Edgefinder so we could put them in the score. Now we have manufacturing PMI and services PMI.
Mm-hmm.
We take the actual numbers and the forecasts and the revisions, and we see the change. So we go off of where PMI is moving on month-to-month basis, and then we score it like that, and then you get visuals on that and retail sales. But like a lot of economic numbers on here, you get revisions, so we had to add that as well so you could see where things are actually moving, because especially in NFP you'll see some numbers that are just way off from the revised. So I'm assuming when April's numbers come out for the NFP, the 275 is not going to be it's not going to be the same number. It could be much higher, much lower. So,
well, if you look at this yellow line, pretty much throughout history, it's kind of interesting. It's like almost always revised, jolted around a good bit each month. So, I'm glad that we got that added. So, what we did too, as you were mentioning, was this yellow line theme pretty much across the different pages that we've been adding will show you the revisions. So if you're an Edgefinder user and you want to go back and just kind of see the revisions as well, you can always just reference it. We're trying to make these charts standardized across the Edgefinder, and they look really, really good. So awesome stuff on that, Frank. Yeah, go ahead.
I was about to say, Giles and I just finished wrapping up the GDP numbers.
Oh, sweet.
They're not ready for use yet, but I can give you a preview if I can.
Okay.
Let me share
my screen. We love previews.
But here's what we got so far for GDP. It's color coded based on beats and misses. So blue is obviously good, red is a miss in GDP, and then white is just unchanged. So we have this. You can look at which months are doing better than others and where GDP is moving over time. I think you can go back like 10 years. I think Joe said that. So you can go 10 years in the past. But once this is up and running, we'll have look at all these different colors.
Yeah.
But yeah, eventually this will be up for use.
That looks awesome. That's really exciting. So I guess one thing, just a little bit of context, because we got time today. It's a little quieter day in the markets. we've been working on here at A1 on the Edgefinder side of things is that obviously, like with the Edgefinder, you get this sheet, this page here that allows you to look at all the different scoring mechanisms. But we've had like constant people who are fans of the Edgefinder asking for more ways to kind of decode how this is functioning and understand the data behind it. So we've been on this massive campaign of polling, sorting, and showcasing in an easy to read way all of this historical data. And Frank and Giles, you guys have both been killer in getting that all set up. But we've got all sorts of historical data here that can now be viewed on the Edgefinder. You know, things like inflation, and these are just great charts to be able to really study economic data for a fundamentalist. I feel like it's becoming a pretty good like a playground to hang out in. So awesome stuff on that, Frank. Question for you in terms of course, PCE numbers didn't move the market too much. They were pretty much as expected. But even though gold and you know indices are closed here in terms of movement, currencies are making a little bit of a move. Do you have any thoughts about gold going into next week? I don't know if you saw it right towards the end of yesterday before the close. It ripped up to 22.36, which is a new all-time high.
Yeah, I think gold is going higher.
Yeah.
I think the PCE number being as expected isn't really going to do much. And what I think now is sort of when you get good economic numbers, you're going to see, I guess, more bullishness in the indices and even in, I guess, commodities, maybe even gold. But I just think that's the case for now because we are already expecting the Fed to cut rates this year. I think they're still doing three cuts by the end of this year. So everyone's already expecting that. It doesn't matter where inflation is going to move. It doesn't matter where fundamentals are moving. So if we see higher inflation, it's not necessarily great for gold or the indices, but it's not good for the dollar because we're going to see cuts either way. So I think right now it's going to be very bearish. And I know other currencies are trading bullishly against it because some of them are expecting to cut before the dollar. But if we're looking at the dollar against gold or against the indices or against oil, I think that those will overcome the dollar this year.
And here's the crazy thing, Frank. I was thinking about this earlier on the live stream. So I'm looking at gold's price here and I'm thinking, okay, so why is the gold chart moving up, but at the same time, the dollar is also kind of moving up? Well, when I think about that, what's kind of a crazy scenario here and really a bullish thesis for gold right now is that, yeah, the dollar is moving up, but it's because all the other currencies are racing to cut rates too. And if you think about it, if all these different central banks, the ECB, the Bank of England, if they're all racing to cut interest rates, it doesn't even really matter about the dollar part. It's just a theme. All the central banks are cutting rates or racing to do so. That's incredibly gold bullish, right? It's not just about the US cutting rates, it's about all of them. And if they're all trending towards rate cut, we've already seen the Swiss National Bank rate cut. We saw, you know, even out of the Bank of Japan, they hiked rates, but many called it a dovish hike. So it's really interesting. We're seeing a trend there that central banks are looking to get more dovish, and gold absolutely loves that. So I agree with you. I think there's more upside to gold.
Yep.
So
I think so too.
Should be interesting. Anyways, last thing I'll ask you about. I was talking to Kenzo just before this, and we were talking about the case for the Dow Jones versus the NASDAQ. If you had to pick one, which one do you think performs better in the next 6 months, let's say?
I'm gonna have to go with the tech stocks. I think the Qs are always gonna kind of, you know, do better in my opinion when there's an uptrend in the market. I think it's pretty obvious that it's the tech stocks that do the best. They outperform.
Yep.
In this case, I don't know if it will happen this year or not, but there has to be some sort of correction. And in that case, the Dow will probably be doing better. But in my opinion, I think that the market is just going to keep chugging higher, and then it will get a little ridiculous, and people will be in some euphoric state, and the NAS will be higher than the other indices. But at that point is when things will crack, and then I'll no longer think that way. I'll think the Dow will be performing less worse than the NASDAQ. But
right. And that is the outperformance case. You're right. Like usually when the Dow is outperforming, it's because the market itself is not doing that great. Because in a good environment, you're going to have like tech just flying high and running races like it is doing right now. And you're probably right. I mean, it could continue to go on. It is an election year. We're seeing rate cuts, come into the picture. While I do think, a pullback would be great, it doesn't have to pull back all that much. And again, market still favors the upside. I mean, our own indicator is favoring upside still for indices. I mean, here is US 30 showing up on the top of the list. Oil and gold. Well, gold gave back some of its readings for some reason, but right now the Dow is getting a picture, and the NASDAQ and S&P keep trying to come up into the bullish territory. But kind of interesting. We're still seeing overall a lean towards being bullish on indices and commodities for that matter. So we'll have to see where that takes us.
Yeah, it'll be interesting for sure.
Yep. Well, Frank, I want to thank you for coming on. Thanks for hanging out for a few minutes. We've got a little bit longer to go here before Chris is in here, and I'll just do some other fun Trader Next stuff in the meantime. But thank you for coming on, helping out with the show, and we'll see you back next time.
Yeah, appreciate it. Thank you.
Yep. See you, man. Okay, yeah, so I mentioned, guys, in terms of top setups right now, a couple things that we're looking at. We've got U.S. oil. We got the DAX in here. We got Dow, bonds, and I did sell some puts on TLT, which have been going really well. I'm going to stay in those positions, I think. But I did mention, so I'll show you this. We got time today. We're hanging out today. So let me just make sure I don't accidentally show anything too sensitive. One moment. Okay. So I want to show you guys this. Hold on. Okay. Okay, so I want to show you guys this options position. Can't get my, okay, there we go. Okay, so I want to show you guys just really quick the options position that I'm in terms of TLT. So TLT, part of the reason that I took this position was because the Edgefinder. So you can see US 10Y. This is the 10-year bonds, right? So 10-year note here in the US, getting a bullish reading. So I went ahead and what I did is I sold puts on TLT. Now TLT is a 20-year plus treasury bond ETF. It has a collection of longer duration bonds, okay? And so I sold puts on this with an expiration date all the way out to April 26th. So what that means is that I collect a premium. I collected $1.07 per share, and I did 1,000 shares. So I collected $1,070 for selling this put. So I sold this put out of the money right over here on this white dashed line. That's when I sold the put. And the market has moved higher since. So of course, I've collected now, if I were to close out this position, I've collected like 50% or 40% of the premium, the max premium. So my thought process here is that if this market keeps ripping here a little bit higher, I'm probably going to cut the trade early, right? If I get like 75% of the max premium, that $1.07, I'll probably cut the trade early, take profits, and find something else to do with the money. Or at least with the buying power, right? So If it doesn't though, if we just go sideways, then I'll just stay in the trade. And if it goes down, then I may get assigned, in which case I will own 1,000 shares at $93 a share. Except I will also have collected the premium. So I get 93 minus $1.07 share price. So I get, what is that? $91.93. That would be my average entry price on the position. Anyways, the reason I'm sharing this with you is because what's cool is that the Edgefinder, sometimes people ask, can I use the Edgefinder with my trading style? Well, I have two trading styles, and I use the Edgefinder for both. I use the Edgefinder for both my options selling strategy, which is what we're talking about here, and my usual momentum trading style that everyone mostly sees on my channel. So with this bullish setup, I'm willing to go ahead and start selling puts on TLT. At the same time from this, I have US oil, and I want to make a little quick case for you on something. So why do I show you that? Why do I show you my live positions? Why do I show you, my P&L on the screen? There's two main reasons. Number one, I think transparency is really important in this industry. I show you guys my live accounts. I show you my performance over time. I'm not here to hide anything. I'm not here to sell you a pipe dream. This stuff is really hard work. It's incredibly difficult psychologically, as well as comprehensively. It's just really difficult to become profitable trading. So number one, I like to be transparent because I have a platform here, and I think it shows respect to your audience when you're transparent to them. That's number one. But number two, I sell stuff. And because I sell things, I also think that it is a value add to me selling a product that I show you that I actually use and put my hard-earned money into the products that I sell. I don't see a lot of people doing that. I do see some. There's some notable traders that I highly respect that do the same thing, that have inspired me years ago to start doing that. Right? I share my track records, performance, all that good stuff because I've been inspired to do so by other people who I really admired. So that's why I do that. That being said, when I show you guys the Edgefinder as a product, and you also see me using that analysis that I'm using, the tool that I'm using to actually trade, that is the purpose behind why I do that. What programming languages? We use the Google Suite pretty heavily. We use some Python. We use a bit of everything, several things. Hope I can buy your Edgefinder soon. I hope you can too. It's a wonderful product. Gold is a shelter from inflation. Could be, Anton. Could certainly be. Although during periods of elevating inflation, a lot of times, if the economy is also doing well, gold is actually a terrible hedge against inflation, right? So if inflation is rising, let's go I for inflation. If inflation is rising, but the economy is also pretty strong, gold does not usually do very good in that environment. Now, if you get this case, this is probably what you're talking about. The economy is doing poorly or deteriorating, and inflation is still a stubborn problem, then yes, that's where you see gold really fly. The market was worried about this scenario during COVID. And if you take a look at gold's price in 2020, it launched, right? 2019 even really. Into 2020, it just really launch padded off of that. So is gold a good inflation hedge? It is, but it isn't. Over long periods of time, yes, it will rise in value, but in short spurts, it's not like inversely correlated to inflation. Or actually, it's not correlated to inflation, I guess. So anyways, I mentioned, you know, when I talk about these products and I showcase these products, that I also put, you know, real money on the line with the trades that I'm taking and all that sort of stuff. The reason I share that with you is that, of course, I do sell products, these things that we build. We have a company surrounding this stuff, and that's why we're, of course, on YouTube. I do genuinely trade, but I also have a software company. So I try and, you know, keep it real by sharing both. With that said, if you guys want a 30-day trial, if you want to access this tool and try it out for yourself, see if it would be useful to you in your trading, you can find out details about that by clicking the link that's being dropped in the chat right now. So clicking this link will take you to an application. And if you fill out that form, someone will send you some information about how you can get 30 days of access to the Edgefinder. So check it out. This is the most bearish readings, by the way, on the Edgefinder that I've seen in a minute. It's been really quiet on the bearish side until all of a sudden. Pound yen, Kiwi yen, pound dollar, pound CAD, AU, pound Aussie, Kiwi dollar, pound Swiss, Aussie CAD, Aussie Swiss, Aussie yen, the FTSE. Actually, what's the UK stock market looking like? I probably would not be selling that personally just because it's ripping. So if you see some sell-off in this, might get a bit of a different picture. So if we get like momentum shifting back the other way, you know, this is still probably just in the realm of a pullback. But if you get something like this, like a broken trend line here, that could be really interesting. So, yeah. You know, the other one that's been on fire has actually been the DAX. Look at the DAX, guys. This is crazy. The DAX is flying high here. This one's actually been on the Edgefinder as a bullish setup for some time, but I haven't had any sort of pullback opportunities. In fact, I'm just curious. When did the DAX get bullish? Let's do an experiment here. Let's take a look at the DAX. And I'm going to go back in time to the first point that we got bullish reads from the DAX. Can I get that data? Where'd it go? Apply. There you go. Okay, so it's earlier than February 1st. January? Okay. Here, okay, it's February 1st. February 1st was the first day. So remember that date, February 1st. Okay, let's go take a look at February 1st. When was February 1st? Vertical line, February 1st. Okay, right here. So the Edgefinder first gave a bullish signal on the DAX right here. That's pretty crazy. Of course, what that's telling you when you get a bullish reading on the Edgefinder is it means that most of the factors that we use in the scoring pointed bullish. If you get a 5 or greater, we consider that, oh, that's bullish. It's currently sitting at 7. And when looking at all the different factors, it started giving a bullish signal Thursday, the 1st of February. So I didn't take that trade. Obviously, in hindsight, I wish I had. But this is the initial signal that the Edgefinder gave you a bullish read. Now, I'm also curious, while we're on that topic, at no point since then has it given you anything other than bullish or neutral, and then back to bullish. It went to neutral on, let me look, March 2nd. What happened March 2nd? March 2nd. Let me just copy and paste. Copy, paste, March. Okay, like right there. It went to neutral on this day. And then when did it give you the next bullish signal? Let's go look. The next bullish signal, so 5 or greater, came out on this date, which was March 13th. March 13th, we got a bullish read again. And that is this day here. So neutral, bullish, bullish. So this is a way you can, by the way, this is a way you can back test the Edgefinder. You can go back in time and look at the scoring on the Edgefinder's score tab. So again, if you do decide to go ahead and try it for 30 days, you can do exactly what I'm doing right now on any of your favorite currency pairs, commodities. We have pretty much everything in the tool. So if you would like to do what I just did, if you'd like to get 30 days to try the software, figure out more about it, again, we'll drop the link one more time and get some information there. I love this. I love the name change, by the way. For those of you who are Edgefinder fans, you know we used to call this the historical backtest section. We've renamed it the score indicator, so you can see score over time. It's a pretty cool indicator. I like looking at it. It's pretty cool. Let's do another one. Why not? We've already done gold many times. Gold smashed the Edgefinder. It was just perfect recently. Let's do a different one. Let's do oil. I mean, that's a position I'm in myself. So let's do oil. Why not oil? We'll go to oil. And this one might not be as picture perfect. I don't even know. I haven't done any of these. So, well, it's been pretty much bullish, but you can see lots of bullish and then pauses, bullish and then pauses. So let's just do this one really quick. Why not? First got signals to be bullish on January 13th. Okay, January 13th. Let's go to the daily chart really quick. First signs of bullishness, January 13th, was right around here. Very nice. Okay. Bullish, 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 stayed bullish. Kind of went into neutral. The next, well, you got bullish signals mixed in here. So you can see it wasn't as solid of a bullish reading for as long. But you did get some bullish cues. We went neutral, and then we went bullish again January 18th. January 18th. So right here. Another big bullish jump was January 23rd or January 25th. 23rd, 25th. These days bullish. All these reds are just days that the Edgefinder triggered into bullish territory. Yeah. Let's do GJ. Someone said GJ. Why not? Okay. GJ. I don't know if GJ has had very many strong signals either way from top of my head. I could be wrong. Let's look. Oh, what is going on? I got to check. We got some red. Oh, I know what's happening. The score is going outside of our parameters here. I got to work on that. It's color schemed, but if it goes beyond the limits, I don't know if we have those color schemes preset installed in the Edgefinder. So I got to work on that. Anyways, let's see. Bullish January 6th. How did that work out? Let's see. Bullish January 6th. Okay, bullish January 6th. So it got bullish here. Stayed bullish. We went into neutral territory. Let's just go for the next big bullish signal. February 3rd. Okay, February 3rd. February 3rd is this day. Well, it's over the weekend. So this did not immediately work out. So you can see if you had, here's one that didn't work out very well. So we got bullish after this candle closed, and you can see initial dip, but then if you stayed with the trade, it ripped after that. So it's not a bad signal, it just was a day early. February 4th, we got February 8th. February 8th, what happened February 8th? February 8th was this day, beautiful. February 19th. February 19th. Beautiful. And then when was the first sell signal from the Edgefinder? That one was beautiful. Look at that. Like that whole stretch stayed bullish. Very nice. First bearish signal came out March 23rd. This one might not be such a good example. Let's see. March 23rd. So right around here. Yeah, so it hasn't moved since. It's gotten a bearish reading recently. But just because the Edgefinder gives a signal, I do want to reiterate, we also always mention that the Edgefinder giving a bullish or bearish reading is not a signal to just outright buy or sell the market. You still have to use your rules. You still have to find your entries. The Edgefinder is not really intended to be a super strong, like technical entry strategy. It's it's meant to be used with your technical strategy to find entries and do the technical analysis on your own. Anyways, I've mentioned it a couple times. We spent some time going through the Edgefinder here this morning. Try it out. Click the link in the chat here now if you would like to get some information on how you can get a copy for 30 days. You can get 30 days with that link. So check it out. I want to know if it's possible to have a prop firm with these signals if the results are there, my brother. I'm not sure what you mean by that. Like I said, the Edgefinder is not a strategy by itself. If the Edgefinder is not just a blind copy, oh, it says buy, I'm going to buy. Like that's absolutely not the way to use the Edgefinder. Although, you know, some of these examples have been really strong, it's not always strong, and we highly discourage from anybody treating the Edgefinder as like a magic box. It's not a magic box. It is simply a data tool. And you'll see, I mean, I don't take all the trades that show up here, right? Just because something comes out bullish bearish, like I'm not long $ZAR, I'm not long euro pound, I'm not long the DAX, I am long bonds, I am not long Dow, I am long oil. I pick and choose based on my strategy, based on my technicals. So it's not a copy paste service, and I don't want to come across that way, but it is a wonderful tool for sourcing lots of data and building confirmations in your approach. So yeah. Euro USD did actually make a bit of a move here. At one point up almost 20 pips on the hourly candle. It's not bad. From on the day, it moved up about 37 pips at one point. It's pretty good move. So yeah. What are the bank forecasts looking like? We're not going to do them today. But again, if you have a copy, just go through it yourself. You can click to anything you want. On the bank forecast tab, you can look at research teams and their forecasts for various currencies, gold, etc. Here's oil. Where did my chart markups on? Oh no, I deleted my chart markups on oil. Dang, I'm gonna have to redo that. When I was drawing stuff, I removed all, which had my markups on this. Well, we can just do it really quick. Why not? So let's just do it. This level of support was around where I entered. I had a fib drawn from the swing low to swing high. I liked that 38.2% retracement. I entered right around here. In fact, hold on, let me all right, let me see. Okay. I want to realign this correctly, so give me a second. Okay, my entry was 80.65. Stop loss 79.82. Okay. There we go. All right. There we go. Back to business. I just had to get my chart redrawn because I accidentally deleted it. But USO still running hot. We'll see if oil can continue to make its move. What's up, Warner's Way? Thanks for hanging out. Again, kind of a quiet day, but we've been doing some Edgefinder testing. We've been doing all sorts of stuff here. So welcome to the stream. Dollar yen just choppy here on the day now. Some currency pairs are making moves. You got pound USD trying to stab higher. This is kind of interesting. Pound USD is actually getting a bearish reading, but again, I still like the idea of a rate at the rate that it's kind of moving. I'm not really seeing anything, but if it moves up here, may get a little bit of interest on that side. What month are rate cuts expected? Rate cuts are expected, I think, June. Yeah, pretty good solid chance we see a rate cut in June right now. If not June, it's very anticipated that we'll see by July. Is that a guarantee? No. Things could change, right? By the way, you have some news coming the first week of April and second week of April that could be really, really market moving, right? Because in April, you have two big things. You have, well, several big things, but you have FOMC April 10th, CPI April 10th as well, jobs numbers next Friday, right? So you do have some big stuff that could be really market moving. So we'll keep an eye on that. Anyways, real quick, guys, we're going to take a break and bring in Chris Pulver in just a moment. Say hello to him, hang out with him. It is, again, like I said, it's a bit of a quiet day. If you're wondering why certain markets aren't moving, it's because Good Friday here is keeping markets closed. Of course, we still have FX making moves, and sure that will be interesting as well. So we'll take a quick break and then come back, hang out with Chris. So right after this.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edgefinder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right. Hey, Chris, how's it going, man?
What's up, Nick? How you doing, man?
Pretty good, pretty good. Market to close today, like I was just saying, but still got some, we got some PCE numbers that came out this morning. We may get something interesting out of Jerome Powell this morning. I kind of figured that although the markets are going to be kind of quiet today and Monday, that you could still kind of do a little bit of a recap, like everything that's been going on. Where's your head at in terms of going forward, whether it be indices, gold, currencies, wherever you want to start? What are you thinking going forward into next week?
Yeah, so I would like to see some volatility. I showed this morning in my session. This is pretty crazy, man. If we go back to Wednesday, that was Wednesday's move. Thursday, gap, nothing happened after the gap. Friday, nothing really happened. Gap lower on Monday, nothing really happened. Tuesday, nothing really happened. Wednesday, nothing really happened. Yesterday, nothing really happened. We've had in the last, this entire week of trading has essentially been less than the entire day of last Wednesday. Yeah. So did you notice like the S&P, like, it carved out an all-time high again? I think there's 21 or 22 all-time highs in the S&P so far this year, which is a pretty good pace. But man, it just, I mean, you look at the, this is the Q. So let me go to the SPY. Look at the SPY yesterday. It's like, sometimes when it's like, everyone's like, an all-time high. It's like, that's not really an all-time. It's like, gosh, it's just barely,
like
barely
barely
getting there.
touching it.
Yeah, it touches like all-time high. It's not that cool, man. So I'd like to see some more volatility coming into next week. I mean, okay, look, we're through Q1, right? Markets are closed. We have PCE coming in today during a holiday. The first thing I looked at this morning was the currency strength meter, and guess what? Garbage volatility. I'm not sure if you've taken a look at this recently. On the Edgefinder, do you guys have the daily trading ranges by chance?
We don't have the daily trading
Okay.
ranges. We do have a simple heat map, but
Yeah.
pretty much what you got. Yeah.
Okay. So if I want to show trading ranges, and again, I'm going for the last 2 weeks of average volatility. This shows that. Take a wild guess here, Nick. What do you think is the biggest moving currency pair right now in the Forex market? Of majors, like no exotics, just majors and minors.
Yep. I'm gonna of the actual majors, I would say dollar yen. Of the kind of majors plus the major crosses, I guess, pound yen.
Pound yen and Swiss yen, 122 and 121.
Swiss yen, interesting.
Yeah. Well, the Swiss yen. So we actually had the Swiss with the cut last week on Thursday. The Swiss had a nice little poke of like a lot of weakness across the board. I mean, I've been long against the Swiss for over a year, and it's finally starting to pay out. I mean, I'm sitting on this week in one of my accounts. I'm sitting on like 6,100 pips of profit that I'm still letting it run. I'm not joking, dude. Like I'm investing in the Swiss franc basket, going against it obviously to get some positive swap and financing, but these big positions I've been building and they're finally starting to pay out, and there's a lot more to run. I'm still looking at maybe the actual movement is still anywhere from 200 pips in a currency pair to 500 to 1,000 pips in a currency pair, and all I'm really looking at for a Swiss pair would be like a 3-wave move or a 5-wave move. I mean, if that's all I did was waited for a 3-wave to complete, there's a ton of profit still to be made. So anyway, the reason I bring this up is, I mean, if traders, I had a trade this morning that just said, hey, Chris, I adjusted my strategies. I'm only looking at like 20 pip scalps or 25 pip scalps, which is awesome. I mean, right now, if you're looking for income in the Forex market, I do think you have to change your expectations where you're not going to see a 100 pip day. You're not going to see a 150 pip day because they're clearly not happening. So, I mean, here's a good barometer. When I first started trading Forex back in like 07, 08, the euro dollar was moving like 125 to 150 pips a day. So I've been in environments where I've seen, the euro Aussie, pound Aussie, euro New Zealand, pound New Zealand moving 300, 400, 500 pips a day. That was during 2020. I mean, you saw that.
Yep.
Not that long ago. Yen pairs in 2012 and 13, we had, yen pairs were moving 600 or 700 pips a day in 2008. You had, but again, I go back to what's the most liquid currency pair? It's probably the euro dollar, maybe the dollar yen. But if the euro dollar is moving, 100 plus pips a day, that's a pretty good volatile environment. You'll have other currency pairs on the peripherals that'll move 200 pips a day. But if the euro dollar is at 50, 60 pips, the expectation is you're in a low volatility environment. And right now, this is why we keep talking about this, Nick. The carry trade is so important. If we have low volatility in Forex and we have this drifting melt up in the stock market, it's low volatility, it's carry. The market's just still digesting all this liquidity, and it's just not derailing. And now that we've slowed down so much after FOMC, the Fed didn't talk down the market. I could see us going way more sideways than having more of the same. I mean, the S&P out of the gates is probably up. Is it up 10% officially if we poke that high year to date? It's got to be close.
Got to be close. It's got to be really close.
Let me check. So year to date is 10.16 on the S&P. So
wow,
it's at 10%, and the average move. So number one, 8% annualized is the S&P return historically. During election years, it's anywhere between 11.85 and like 12, 12.5, 13%. So let's just say 12 to 13% during an election year. Doesn't matter if it's Democrats or Republicans, about 13%. Yep. Market likes gridlock, right? Market doesn't like, all one-sided. So House and Senate divided. Good for the markets. They tend to outperform if we have a divided House and a Senate. So anyway, to wrap this up, what do you think about this? We did mention this not too long ago, but the thoughts on the dollar index still being, I keep hearing the saying around there, all the podcasts I'm listening to, they're like, it's the cleanest dirty shirt in the laundry.
Yeah, I think
You know?
that's kind of the case right now. A lot of, you're looking at, I even kind of saw that we can use a little bit of Edgefinder logic here really quick. I'll show you
Uh-huh.
this. So if I just look at some, I was looking at yen crosses earlier in the stream here. So let me
Okay.
just get back to this. I was just looking at yen crosses, and I thought this was kind of interesting. If you add everything in here, yen, uh, we don't have a Swiss franc, but we can. Let me find it. Where is it? Swiss yen. Okay. So I was looking at this, Chris, and to answer your question, kind of the same synopsis, because what we can see here is that the yen is actually right now, at least in terms of economic growth, it's showing some strength compared to a lot of other places
Okay.
like the UK, the Kiwi, right, the Australian dollar. When we're looking at, GDP comparisons, PMI numbers, retail sales, inflation, like most of our readings here are leaning towards, okay, yen strength. But then when you look at the dollar yen, it's like kind of reaffirming what you're talking about. The U.S. economic data, there's not a huge preference towards Japan, whereas Japan is preferred against several of the other currencies. Japan is not preferred over the dollar. So I
Right.
kind of can see that too. We could do that same study here, just across the US dollar stuff. So let's just do this. We'll just reset and we'll just go major currency pairs. And you can see the dollar here is pretty favored, right? So if you see pound USD short, Aussie dollar short, Kiwi dollar short, neutral, 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 neutral. So of any of the readings, the dollar's getting favoritism. So kind of interesting. Yeah, it might just be the case that although the dollar, yes, we're still going to see rate cuts, the story is still other places are going to cut sooner because their economies are hurting more. So I don't know, kind of interesting.
Yeah, and I think if the eurozone wants to see the DAX continue to go higher, it probably happens on the back of a weaker euro. The Japanese yen has been weak, and the Nikkei has been cranking all-time highs, and it's actually outperforming year to date. The Nikkei I think is up. I don't know what it is year to date, but I know that the rally from last October's bottom to November, December, like it's up 35%.
Mhm.
So Nikkei 225. Right out of the gates, let me see when the year started. So this is the
Yeah,
daily time frame.
I just
It's
did it.
it's
It's 21%.
wow. So it's double the S&P for the year to
Yeah,
date. That's
that's
it's
crazy.
crazy. It's crazy. So again, weaker yen, stronger market, weaker euro, possibly stronger DAX.
Mm,
And so I said this morning. I could see the dollar index being a very challenging basket to trade, and I could see the dollar in general in forex as a tricky trade this year because maybe it's low volatility. It might favor a slight carry trade, maybe, right? And especially over the next 2 months, because now with the Fed being silent until May 1st is the next rate decision, but it's going to be a pause most likely. The market's anticipating a June cut.
mhm.
But we still have, so we had PCE come out today. April, I think the second week of April, we're going to have another round of CPI and PPI data. And the Fed doesn't have to say anything until May 1st. So
Yeah.
we have all of April to see like how sticky is this inflation getting? Is the Fed going to start doing something to act on it? Or are they going to continue to ignore it right now? Maybe they do. So I could see the dollar as a currency performing better against the euro, better against the CAD, possibly the pound and other currencies if these central banks cut over the next couple months. But if the Fed pause carries until June and we have other central banks cutting within that window, that's why I say the dollar index could continue to rally a little bit. And that's where, let me get to my charts here. I'm just talking with my hands. So, dollar index, I could see this being a little bit of a rally. This past support, this level here, broadening pattern is all the way up towards 108. It might not, I don't know, man. It might not feel like it's a strong, aggressive rally, but I could see that we don't really break back below 103. Maybe it's a slow grind to break these highs at 105. But if we
Mhm.
can get above 105 on the dollar index, I feel like the dollar index is capable of getting up towards 107. And again, though, the weird part would be if the dollar index rallies here and the stock market goes higher, that is not a typical correlation. So it's like it would be an
Right.
odd environment of this melt up where assets still go up, but the dollar could underperform against equities, underperform against gold, underperform against Bitcoin. And that's another thing this week. I know it's on your radar. please tell me you're still long gold and you're just
I
crushing it right now,
am.
because
I
it's
am.
been a great trade, man. It's been such a good trade.
I know. And Chris, I'll show you. I'll just brag for a second on my gold trade. So I've entered twice. I've
Okay.
told you a couple times. Went long, literally like before the run up, which was great.
Yeah.
If only all my trades looked like this, Chris, it would just be easy. And you and I, we could go down to Mexico and just sit on the beach and just hit trades like this every day. Wouldn't trading just be so easy? But no, I'm kidding, of course. But yeah, so I am still long gold. But to your point, Chris, what I love about the story for gold right now is we're here slicing up like, well, why is the dollar up? Oh, it's because the other ones look weaker. But what I love about the whole thing, it's all of them competing to not cut rates. But the point is, all of them are having to cut rates. That whole story contributes to gold going up.
For sure.
And so I'm not by any means like a gold bug or a perma bull on gold. I've shorted gold, many times. And so I'm not perma bull, but the scenario here just looks really strong for gold continuing to do well. I sold puts on the miners, GDX. I did okay on that. I went long gold, and now you saw I also sold puts on TLT. So I'm very exposed to the rate cut story, but it's been on my side. The wind's in my sail right now. And when it shifts, I'll have to cover for profits or just kind of adjust. But for now, things are going well on that front.
Perfect. Yeah, I'm the same way. I have positions on GLD and GC for gold futures, and I also did a GDX trade, a couple of credit spreads. I was going to do a long call and do like a longer term diagonal spread. But my GLD position right now, I just did it this morning. I paid about $7 for my debit. I'm up about $7.50 already. So I'm up over 100% in my position. And I'm looking to hold on to this a little bit longer. So my measured move conservatively is 2271. That's right there in the radar. Like, we could possibly hit that next week. So
Crazy. Chris, my measured move, so right at the beginning of the year, my target for 2023 was 2280. So $9 off from your target there, which is
okay.
Kind of what I'm not looking to take profits if it hits that level personally. I like to trail stops, but that's the point where I really start to ratchet in my stop loss again. But it was just kind of crazy. I was thinking about that. I almost have to be like JP Morgan or Goldman Sachs and adjust my yearly target here now that the market's running.
Yeah. Can I ask you, how did you find your target? How'd you get 2280?
Yeah, I had fun with it. So what I did was basically I looked at. Remember, for a long time we talked about the breaking of all-time highs and how a period of like a correction period where you actually see a break was usually followed by when an all-time high hits, it's usually a really bullish signal. Well, I tested it. I went back, and my measured move idea was based on what happened in 2020. We had a very long duration from 2011 until even retesting all-time highs. And I just tested and I said, well, how much, when we did get above that, how much further did we go? We went about 10.5%. And then I said, well, we've seen something similar here forming, where we've been kind of your cup and handle, kind of your just long period of consolidation since that 2020. Well, we got the breakout. And my thought process was, there is a 10% move to repeat that long pause, all of a sudden, all new all-time high breakout. I think 10% is a conservative breakout. To be honest, this was a wonky move just because of COVID was such it broke everybody's data and everybody's systems. It was so weird. But I think that a 10% move here is perhaps, at least if it were to repeat this leg, is how I calculated that. Nothing magical, just a all-time high breakout. How far does it follow through? Seems to be about a 10% move is a healthy just breakout, but it doesn't mean it couldn't just 10% pull back, another 10% pull back, another 10%. So we'll see.
Yeah. It's interesting because we got there very different ways, but yet we're still right in the same wheelhouse as far as our profit projection.
Did you use bid extensions?
Well, so I did a couple of things. So what I did first was I just saw this range, and I just measured the 50% move of that range, and that's my halfway target. And then I measured the full range, and that's my full one, like that's my 100% move. So I this is just straight up from Forex trading, news candles, breakouts. It's kind of like you've got your range, you get your breakout measurement. Now, when you just said this big rounding pattern, I'm like, you know what? I do see a head and shoulders in silver. Oh my gosh, I see like this is kind of a head and shoulders in gold. And granted, like it's in the context of a larger range, but if this is a head and shoulders as well, one thing I can measure is this yellow box is my symmetry. So I took the measurement here from this low to high, and I projected symmetry right there, which is again kind of right in that same window of about 2270. But here's the nice thing too. If we see this high retested, and this is wave 1, this is a pullback for wave 2, this is a push for wave 3. If we have a pause for wave 4, Nick, wave 5 gets us up here towards 2470. So like you said, we could have, a pullback another 10%. We could be kind of approaching our projections the same way. I don't know. I mean, for me, because I'm trading mostly options with my gold positions outside of, gold futures, I'm not long the futures contract. I'm just trading options, but I'm long the GLD contracts. And I do think that, right now my GLD, if it gets up to 210, I'm max out for my profit. I've got a $20 cap on my position. 210.
You said it and then you spoke it into your typing.
210. My fingers are taking over. So GLD, I've got a covered call, or not a covered call, but a sell call against my diagonal at 210. And right now that first measured move is around 213. So I am debating. If I could look at it now, it doesn't really matter because the markets are closed. But if I go into Monday and I'm doing a portfolio spot check, I might look at rolling, as long as I can get a credit for it, I might roll it out another week or two and see if I could get maybe another credit and roll my strike price up a little bit so I can take the 210 and roll it up to 211, 212, possibly for a credit. So I'd have to give myself time, which right now I think I'm going out to like April 19th for the 210, which isn't that far away. But if I went to the May expiration and I get myself the extra time on that sell call, what I might be able to do is roll that out and up for a credit. So I could roll it up and strike from 210 to 211 or 212, and then maybe still get like a 30, 40, 50 cent credit for it, where I can get more credit on the net position, which lowers my cost basis, and then also increase my overall profit target by a couple of bucks to give me a bigger gain. So I'm, like I said, already up 100%, no complaints on that. If we get up to 210, that would give me almost a 200% upside. So I paid about $7. If I get another credit for it, that'll bring me down to like below $7. And my max profit would be, let's say I can roll it up to 213. So it'd be a 190 minus 213. And I pay, $7. I pay $7. That'd be a $16 gain on a $7 debit. I make 228% of my gold position.
It's not bad.
I'll take it. Yeah.
Yeah.
So we'll see what it does. But
Yeah,
that's what I'm looking at to do next week.
Yeah, exactly. You also mentioned silver too. I think that, if you're going to see a bigger secular move into the metals world,
Yes.
and this is the thing, you look at gold when it really runs. I've made this point many times, but I know somebody in the audience who's new to trading needs to hear this. Many people, they get used to trading the environment that they're trading. Like they think this is how gold moves. Oh, it chops around. When it goes too far, oh, it always snaps back. When gold really moves, you need to be so careful if that's your way of thinking, because gold makes its moves. Historically, the way it moves is it moves boring and nowhere, and then all of a sudden just makes massive gains in a single year. So silver is like that, even on steroids. Like here is,
that's COVID.
2020 up 144% on just a shiny rock in the earth. Like it's a crazy thing. So the point I bring up with silver, though, is that in most of the major bull cycles for precious metals, usually gold starts, but silver starts to outperform. So a really big signal to metal market bulls right now, I would say, would be, are we actually going to get enough strength here to break through this long-term, as you just pointed out, like we've been in this choppy consolidation for silver. Like, can we get that breakout? If that breaks out, again, silver might actually be the outperformer if you really think metal markets are going to run.
I do think that, because here's one way I look at it too. If we just look at XAU versus XAG and compare a gold to silver chart, what I do have on this chart is it does cooperate pretty well when we get overbought conditions or oversold conditions. So this is oversold, this is overbought. this is overbought. If I start to print the same thing, where right now gold is up versus silver, so gold is outperforming. If we start to see, gold's obviously up to all-time highs and looking great as far as our trades go. If gold, silver on this chart starts to show an overbought condition, that's when I'm going to start looking to get a little bit heavier, probably a little bit more bullish on my silver position. And all I really need to see on the silver chart and where would I want to get long is I'm long already, because I'm essentially doing this in my silver contracts for the futures market. I'm selling puts and doing credit spreads down here. On SLV, I'm selling puts and I'm doing credit spreads down here. I'm also long with a diagonal spread out to January and March of next year. If we break above 26 on silver, that to me is the green light. And it's so close. But that confirmation right there gives me, we had the swing you just mentioned for that huge 140% move, and then it's been all corrective. But this to me is my bullish pattern that once it breaks, measure that move to symmetry, measure that move to symmetry. I've got two levels out here that I'm really interested in. Again, just using the swing. If you measure this low from 2020 to high, take that move right there. Okay. And make that like spot on symmetry. And if we have a push to match that, that's where I got that first black line at the top. So right there is my first measure move. Now, if that's a wave 3, then we look at a pullback that would start roughly around this past resistance. There's my wave 5. So wave 3, that's my projected move. That's my wave 5. And so to me, if we break above 26 on silver with some good looking bullish direction, target 1 for me is going to be 35 and change, and target 2 is going to be 47, 48 and change. That upside wise is way better than silver, or way better than gold. I mean, right now we're talking, if we hit that move, that's an 80% gain in silver. I don't care what gold does, but it's not going 80%.
Right.
Yeah.
Exactly. Yeah, no, I think you're onto something there. I think if you're really interested in the precious metals, everybody talks about gold, but well, it's because a lot of times when people trade it, they trade it, super high leverage. So it doesn't really matter if it's gold or silver. But if you're talking about the actual commodities performance, silver typically is like the leverage version by default of gold. It moves a lot more. Now, that being said, silver, with warning, has been a terrible performer over the longer term. It hasn't moved anywhere since the 2000s, whatever 2000. I mean, long term, there was like a lot of the silver crazy people love to, and I'm one of them, like to point out that the Hunt brothers back in the day cornered the silver market and they drove up the prices, and that's a crazy story. I think everybody should check out this weekend if you haven't already. Kind of an interesting market history. But yeah, silver I think is long overdue for a bigger push up. It's they don't make any more of it. Same with gold. A lot of times people will think, oh, that's too high, but that is like usually a green light for me. When I see a bunch of people commenting on my stuff, Chris, like, oh, gold is too high, like this has to, like this is overdone. I'm like, gold 101, it can way go further than you think it can, because it's it's crazy.
That's a Soros thing. He's like, every time I see a bubble, I buy it.
Yeah, right.
Right. So I mean, if you think it can't go higher, just wait. And right now too, I mean, this is one thing that's been a little bit eerie about the last few days of trading being so quiet is, we're in an environment where April, May is typically, show me on the Edgefinder where we have like the monthly seasonality, because I know that July is a pretty bullish month. Where do I have to go on the Edgefinder here, Nick? If I want to see like what's the history on S&P? Yeah, you can
seasonality.
Okay.
Just hit monthly, and there it is, S&P. So it is kind of quiet in April. In the last 10 and 5 years, there's a slight expected upside, but not as much as February, March, and then also the only time the expectations in the last 10 years have been negative, which is actually really impressive to me that we actually even get. This has been a super solid 10-year period for the S&P 500. So it's surprising that there even is this, but September's kind of an underperformer, but it swings back in July. There's really solid expectations, August, and that's also, Chris, kind of backing into election season heavily. So I wouldn't be surprised if that election seasonality comes into play and we see, second half of this year, a bit of a stronger push. I really thought that we would get some sort of a pullback. In the last few years, we've seen more correction in the month of March, things like that. But again, market doesn't care what I think. It
It
does what
makes
it
too much
wants.
sense. Makes too much sense to get
Yeah,
a crush.
right. Exactly.
Everyone's like, "Oh, the Fed's going to talk it down." Well, they didn't.
Right. They did
I
not.
was surprised that Powell was as dovish as he was, and I was surprised the market moved the way that it did. When we did our session in the trading battle that day, it's like that's one of the rare occasions that you get the news and the press conference pushing the market in the exact
Yeah.
same direction. That's so rare in an FOMC announcement. But it is what it is. We push all-time highs. The next day we hit Q all-time highs, or the NASDAQ all-time highs. And then we just eked out another high yesterday. And again, next week, new quarter, new month, another week to kind of settle back in. I did do some interesting nerding out on some probabilities. I've got a couple things that I think on, I've got like every 1 to 2 weeks, I do a volatility play on the SPY, the DIA. I am actually not a huge fan, and it's not that I don't want to trade it, but I don't love trading the QQQ. I mean, it's obviously a great index. It's been one of the best performing indexes for the last 30 years. The issue that I have with it is, man, do you have to pay for that implied volatility? And it just, when you need the Qs to move, $12 or $13 in a given week to make money, I'd rather trade the DIA, which moves about $7 and you only have to pay $4. So it's
Sure.
like the way it's priced is just more fair, to me at least. And then the SPY averages about $10 to $11 a week, and I pay about $5 or $6 a week. So probabilities on those alone, I just think are better. If I'm paying, $8 or $9 for an expected $12 or $13 move, yeah, I can get it, but I'd rather pay less on the debit if I'm doing a volatility play. But what I dove into is, the SPY. I looked at a couple of things. I looked at the probability of staying within the daily ATR. And what I discovered was on Mondays, over the last 5 years, the volatility is respected within the range of about $4. We're at an ATR right now daily around $4.08. Mondays are very quiet in the SPY. We typically have maybe a slight gap opener high or lower, but either a quick gap fill and just a very quiet market on Mondays as the market just kind of wakes up, starts a new week, and then we start to get some traction during Tuesday, Wednesday, Thursday. But if I wanted to be an option seller, Mondays by probability alone is a great way to do it. So I was just looking at different strategies of what could I do to sell some options on Mondays, and pretty simple stuff. If I do the SPX, because it's an expensive index, I can't do strangles on it. That costs $500,000 for a position, which I'm not going to do. But the SPX Iron Condor is a possible way to do that, or just a single direction credit spread. If you see prices where it is, you can do a bear call spread if you're a little bit more favoring the downside, or obviously bull put spreads if you want to go with the inherent bullish bias of the markets. And then in SPY, you can get a little bit more creative. You can do a strangle on the SPY. I'm going to explore this trade for the next 30 days on my own, but I'm calling it a swap. It's going to be a SPY trade. It's going to be a straddle swap, and all that means is I sell an at the money straddle. So if the SPY opens up at 520, I sell a 520 call, I sell a 520 put, and I do that for a single day. I don't collect a lot of premium. I get like anywhere between like $1.50 to $1.80. Right now, volatility is low enough where I'm not getting a ton of premium, unfortunately.
Right.
But to make it a defined risk trade, if I sell that straddle and the market stays within about that $1.50 to $2 range, it's pretty easy to hit like a 25% take profit. As the day goes on and you get all the time decay that works in your favor, you get an opportunity to see, if I paid $2 for that debit, I can make $50 a day on that trade. So I want to monitor it first. I want to make sure it's something that's sustainable. But what's nice about it is, even on the worst case scenario, if the market moves, $5 against my position, I'll be down maybe $50, $60. So my risk is contained where it doesn't get bad, because I reset the trade every day. And then consistently with the markets having, 65, 66% of the time going within the daily trading range, if we're selling premium or we're selling options, we can make money. So I'm debating on like 25% profits or 10%, but still, I need to have some strategies where, okay, here's a Monday strategy for me. Here's a weekly Friday strategy. Here's the quad trade I was doing, which is like Fridays and Mondays. I want to try to make a good solid 10% for my portfolio, 15% for my portfolio, just on the indexes alone. And from there, it's like I can be no direction, right? Like very little direction, just collecting income and taking, 0.5% risk, 1% risk, do it routinely and generate, maybe 10 to 15% for my entire portfolio. If I did that for a nice little safety net, and then we have a trade on gold, and then we have a trade on Bitcoin, and then we have some stocks that do pretty well. I mean, it's not that hard for me to have my portfolio do, 25, 30% a year. It's really not. So
question for you, Chris, on the options side, do you find yourself, because you use a good diverse set of different approaches and styles with your stuff, do you find yourself usually more on the like selling volatility side, or are you more on the like directional bias kind of buying options side? Which side do you generally find yourself on more?
I'm definitely on the selling option side, but if I'm going to buy options, I typically buy them with the ability to lower the cost basis routinely. If I'm going to be long an option and I've got to pay for that premium, I want to lower the cost basis. So when I do I built this out this morning. I was just talking about this in my first session. If I just did this trade right here, if I just buy an at the money straddle, you're going to see that this area is a lot bigger because I'd have to pay way more for it. But if I add in, and this is, I mean, the strategy here is reverse iron condor because I want to see a breakout trade. Well, if I buy a call and then I sell a call against it, and then I buy a put and I sell a put against it, it makes my debit way cheaper. So all I need for the S&P that averages about a $10 move per week, I need this index to move about $5.70. I believe that the market can do that, right? I believe week to week that the S&P can find a way from this position right here to move, $6 one way or the other. If it does that, I can make money. I don't need it to go max me out at $10 here, max me out at, $10 here. If it goes $6 or $7 and I can grab $1 profit, I just look at, can I hit a 15% take profit or can I hit a 25% take profit? If I do, great. On those crazy weeks like FOMC, we get like, big fat movements where I can get like 100% profit on those positions. But I'm not like, I managed a lot of my trades early during our trading battle because of everything that was going on that day. But the next day, all of my positions were up like another $1 or $2. And it would have been great to be like, oh, I should have just kept them open. But nobody knows what's going to happen during FOMC. And certainly I was way more expecting Powell to be firm and a little bit more hawkish and have the markets dip a little bit. They did not. So I just closed down, took the profit, and it is what it is. I mean, yesterday I'm sitting up another, I don't know, another like 1.5%, 2% for my portfolio. It's just like been super quiet, super calm, but yet my portfolio is just green on the day and it's still rallying, so that's good. No complaints. Yeah.
Yep. I don't blame you at all, Chris. I'm kind of feeling okay with my recent, being long commodities while the market's doing nothing felt really good the last few days.
Yeah.
We'll see if that continues to be the story, but I also would not mind at all if the VIX spikes here for me at some point, so I can get into some wheel strategy stuff. At some point, Chris, I might widen my horizons a little bit with options, in the sense of like, if I'm just stuck in this low volatility setting for a long time, is my option strategy going to get flipped off permanently until it comes back? Like, maybe there's something else I can do, and I might work towards experimenting towards that. But for now, what's nice is that the low volatility environments have equated also to nice momentum moves in a lot of risk assets as well as commodities. So I'm not hating it at all. I've got one strategy working well, the other. And for me, I have two strategies, and it's like a light switch. Usually one is really performing well and pretty active, and then the other one is like kind of dormant, and then they just flip back and forth. And for me, that's all I need. So keeping it simple.
Yeah. I mean, the wheel strategy is great too. And right now, I mean, in a low volatility environment, you're not collecting as much premium, but in fact, I just saw this video yesterday with Tasty Live, or it was a Tasty Live segment. They looked at a study that compared, in a low volatility environment when the VIX is under 15. So if I go to the VIX here, and we're trading in that 10 to 15 window right now, right? The VIX is at 13. In a 10 to 15 VIX, that's considered low volatility. Your basis points earning on selling premium, doing a strangle, you're collecting way less than average if we're at like 15 to 18 or 15 to 20. I think the average VIX for like a 10-year history is like 18. I think that's about the average.
I think if you go longer too, it's been like 22.
Yeah.
Like,
and we'll get a, I mean, we'll get a spike. We know that we're going to get a spike, but a spike is what we typically see is it spikes and it fades immediately. So my point is, if all you did was sell premium, you might collect less for it, but it also plays into the efficiency of the market. You're never having a losing trade necessarily with just selling premium. Like there's always ways to adjust. You're never on the hook for like an unbelievable loss. I mean, you can always make adjustments in your option trades. But if you are long the SPY, I mean, think about this. I mean, and I don't think traders understand this. I just mentioned this yesterday in a class. The average return annualized on the SPY is about 8%. So what is the risk adjusted return? If you want 8% a year and you think about the last 5 years of trading, you went through a 30% pullback in COVID. You went through a 28% pullback during 2022. You went through a 56% pullback in 2008. So you're talking about risk adjusted returns where you have to take 2, 3, 4, 5 times more risk in order just to make your annualized 8%.
Yeah.
So I think traders understand that, I just want a strategy that, I can make, 100 pips a day. Give me that strategy, Nick. I want to make something. I just want to make 50% a year with like 10% drawdown. It's like, you don't understand that's impossible. Like that's not what
you're
the
so
markets
right.
do. Right.
Oh, that's the people. People will be like, why make 8%? I could just leverage it up and make 18%, just buying this. And it's always like you said, market is pretty efficient, it's pretty smart. So it's kind of hard to just beat it with a simple trick. So there's no shortcut for putting in work and trading the environment you're in. I think that there's a reason why we're so active in the meantime. Like you can find ways to trade environments more precisely, but at the end of the day, it's hard to beat that. And most traders are sold the idea that they can get massive returns on no drawdown, and it's such a pipe dream. Here we are. You've been doing this longer than I have. I've been doing this for years. Like it's very, very difficult to get even the S&P's returns with better risk adjust. That's even hard to do that. So
sure. The way to beat it is you got to have the courage to buy when things are really ugly, right?
Yeah.
I mean, I don't know how well you did in 2020, 2021, but I'm hoping you did really well because it was a really easy environment to understand that most people were panicking. It felt like the whole world was going to end. But the first thing I saw happening over that month of February and March was we are getting discounts on stock prices that we haven't had for over a decade. I'm going to get in.
Yeah.
And that's all I thought about was just, and it was literally like, I'm going to test the waters on a bunch of different trades. And they all turned out to be like 100+% winners, if not more. It's like, and if I was still holding them, that'd be even more ridiculous. But the point is, it's crazy, the psychology and the sentiment of investing, because man, when things, it's like right now, it's like what I would kill to have a freaking pullback so I could buy a dip.
Right.
It's like, okay, I guess we're just going to keep going higher or melting up higher, and it gets more and more overbought. But I mean, in a way, we also could be suppressing this entire inflation environment where the Fed seems to be keeping it under wraps right now. But man, I just think like bubbling under the surface, we could have an inflation environment that if it breaks and goes higher, somehow it creates like the vicious cycle of like we put in another Fed backstop, markets go crazy, prices are ridiculous all over again.
Yeah.
And ultimately, it's like, what's going to go higher? Equities, option, like there are assets. I mean, like asset prices go higher. Right now, it's like the best place to be would be in freaking property. If you own land, if you own property, that's probably the best place to be for the next 10 years without even a care in the world. It's just buy as much as you can and leverage yourself out like crazy. Buy property, give it 5 to 10 years. It'll double and triple in value. And that's the one thing. It's like, you can't make more of it, right? Like, as we know, we can't make more of it. We can build vertically, but if you own that land, I mean, it's just going to keep going up. And I think that's the crazy thing over the next 5 or 10 years is that's, and when you see like BlackRock buying multifamily homes and Goldman Sachs buying like basically subdivisions, that's like, where do you think they want their money to be? And it's going to be something that appreciates, and it's going to be a hard, tangible asset.
It's true. It's true, Chris. I'm gonna back out, let you take this show for a little bit. I wanted to mention to everybody who's watching with us. Let me get my quick plug in for Chris here. If you guys enjoyed listening with Chris, he's going to continue to take over the show for a bit. But before I step out, I just want to let everybody who's listening know Chris has his own YouTube channel. He's got his own Discord community, a bunch of great free value that you can take advantage of. We're going to drop a link here as I'm speaking. There it is in the chat. You can find Chris Pulver's YouTube channel. It's just Chris Pulver Trading on YouTube, and you can check out some of his content. Find his Discord there. All sorts of good stuff. And Chris, thanks for taking over the show. I appreciate the conversation. It was awesome.
Thanks, Nick. Have a great weekend, man. I'll see you guys. I'll see you next week.
Yeah.
All right. Thanks. All right, everybody. I'm just going to get a Discord link going. Let me edit this so it doesn't expire. If you want to join into the group, I'll post this link right now. So here is Chris Pulver Trading Discord channel, and that should be posted there. I also want to make the quick disclaimer. You all should know this. If you're joining my Discord group, that is the best place to find me and the true me. I literally posted it this last week, and I said, look, if anybody is getting, getting messages, solicitations from an imposter, from a scammer, it's fake. They spell the name wrong. They directly message you and they solicit. I don't do that, right? I've got this one-to-many group chat in the community. I will post general stuff. I've got a blog. I've got all my analysis, my education, my links, all that stuff is in one place. All my content's in one place. But my point is, this is where you can find me. So if you want to find me and you message me, the real me will reply. But you message me first and you initiate that conversation. I will never direct message you. I will never initiate or solicit. That's silly. That's crazy. Nick deals with it all the time. I'm sure, if you're out there in the public eye, it happens. But it's funny, like, they spell my name wrong. There's a period, there's an underscore. They use something else, but they're trying to use the same avatar. They're whatever. There's all sorts of creative ways to be scammers. But in my channel, that's the best place to find me. All right. So really quickly, I'll just review this, and we can take a couple more requests. I got to jump in about 20 minutes. But thanks for popping in here. So when I go live on YouTube, my channel is youtube.com/Chris Pulver. You'll see it under the handle Chris Pulver Trading. I'm going to post a blog this afternoon on how we did this week. So overall, I'm trying to think. Gold positions are doing really well. Bitcoin's up. I mean, the portfolio has been up this week. I don't know if I actually closed out for a lot of gains. I still have some strangles and straddles and credit spreads. I did have a couple expire on the 28th. I did have some income this week. I'm trying to think what it was. Maybe some credit spreads, maybe an iron condor or two. Nothing crazy, but I'll find out what those gains were. So Forex wise, it was a pretty good week. I think I generated over 2,000 pips with auto trading. I had a perfect storm robot this week. This is one of my range robots. I had 40 pips on one of my systems. I had 876 on another one. And my Pockets Pattern Pro was up 243. And then my trend system that's been crushing it this week has made a lot of money on some dollar pairs and Swiss pairs. It's up 1,218 pips. So I think I added up the numbers earlier today. It was like 20. It was over 2,000 pips. So 1,218 and 40 and 876 and 243. So just in auto trading this week, I did 2377 in pips in the Forex market. I'm trying to think. I'm sitting on, and this is gain profit, gain pips in my accounts. I'm sitting on over 6,000 pips. I had this class that I created last fall. We started to basically invest in the Forex market, meaning I wanted some positive swap, I wanted some positive carry, and so I built a class called Portfolio Builder. And I started with a $10,000 account. Right now, the current balance is around 11,001. So I'm up over about, let's say 10, 11%. But the group trade, so all my trades as a net position is up about 700 pips. But if I took all trades that I'm in, I'm sitting on over 6,000 pips of profit. I'm not taking profit yet. I'm still building these positions. I think there's a long ways to go. I still want to let these profits run. So maybe my first big chunk would be, okay, look, we're up 10,000, 15,000 pips. Now I'll take some profit. We hit my, levels where I'm looking at, okay, we might have a pullback and look for, a wave 2 or wave 3 structure, whatever I'm watching on the charts. There's the good thing. There's plenty of time to watch these trades. So I launched this course, I think in July, August last year, again in September, again in November. And you could have even participated at the first part of this year. Look, there's still upside potential on all these trades. So again, if you're interested in my Discord and the education section, I have all these courses, full strategy guides, videos, robots. I do a lot of one-on-one instruction as well, my private instruction. I was telling traders this too. Somebody asked me, Chris, if I want to trade options, I want to learn more about your strategies. I want to trade Forex. Look, check out some, like, watch videos on A1 Trading, watch my videos on my channel. I've got a Trading 101 video series, support resistance, trend lines, winning trades, equity management, leverage, margin, trade size, whatever. All sorts of like trust content. Get a feel for what you want to trade there. Get a feel for if the subject matter that I have is there. Watch a couple videos on it. If you're interested in a crash course, if you're interested in learning faster, best place to do it's probably just hit me up for a private instruction session. Spend an hour with me, spend 2 hours with me, get right to the crux of what we're trying to accomplish. I know for somebody that's never traded options, give me a couple hours, I will make you think, man, I want to trade options. And again, I'm not selling anything. It's just I just want people to know, like, if I could have traded my Forex portfolio like I trade options now, I think I'd be way better ahead because I've had a way tighter management and way better risk management through the last 6 or 7 years that I've been trading options. So, and it's very versatile. You can always position for up, down, and sideways, which is nice. And it's nice to make money when the market doesn't go anywhere, right? If you think about options, I'll just give a quick example here. If I have a strategy, how about this? Here's what the market could do, right? Market goes up a lot, up a little, okay, sideways, down a lot, or down a little, or down a lot. Is that fair? The market can do one of 5 things, yes? Okay. Now, what if I had a strategy, which I do in options, that if I take a trade and I just did something like, okay, I hear Nick does a lot of like cash secured puts, or he sells puts. Okay, well, a put does this. If all I did was sell a put, so I'll say my strategy. If I sell a put, as long as the market doesn't go down a lot through my sell put, I make money, I make money, I make money, I make money. You make money 4 or 5 ways. If the market does go down a lot and you sell that put, you can still take the assignment. That's Nick's wheel strategy, where he gets assigned the shares and then he adds covered calls when he's assigned, and he lowers the cost basis and he repairs the trade to turn into profit. Because in a bullish market, yes, you can take assignment, you can flip trades. I'm doing that right now with Chewy, right? I got Chewy, CHWY is the ticker. We closed the week at 15.91. I own the shares with a break even of around $16. Let me see what my break even is exactly. My break even on Chewy is $16.49. Okay, so I'm upside down about 50 cents per share. And after April 5th, I'll be able to sell another call and make some money. April 12th, April 19th. I mean, if I get decent premium, I'll just keep lowering my cost basis. I don't intend on hanging on to the stock much longer than maybe a month or two. I mean, obviously, if I get this big fat run to the upside, I'd like to stay out of the way of it. But realistically, if I get to $18, $19, I'll make $1,000, and I'm fine with that. Now, longer term, if I could look back and be like, oh man, I remember when I had Chewy at $16 and now it's up to $30. Well, I don't trade like that. I mean, if I'm trading for right now, I know my break even. I know what I'm willing to take. I make it a profit target of $1,000 or more. If I can flip this thing over the next couple of weeks by lowering my cost basis, get it called away, so be it. If it becomes a really big move to the upside, then I could possibly roll some calls out there. And like I said, roll it out in time, get some credit for it, know where it's going to get called away. I'm doing the same thing on Alibaba and Baidu. Baidu is trading at 105 by April. I think I did April 26th. If I get, so right now the stock stays above $100. I'm in this for a break even at 94.71. If I get called away at 100, I'll make $5.29 a share. So if I have 100 shares, I make $529. If I have 1,000 shares, I make $5,000 on just repairing a stock that all price has to do is go nowhere. If it goes down a little bit, I still make money. Goes sideways, I make money. Goes up a lot, up a little, I still make money. And I get it called away for profit, right? And this is also a stock that I'm extremely interested in, where if and when it gets its act together, there's a lot of upside potential. We're talking about how excited we were on silver. Same thing here. If this thing just settles in, man, I love this position to get started. And I think we have 100% upside on a stock like Baidu or Baba. So traders know this in my trading room. We've been trading those for a while. But anyway, good stuff. right? So check it out. Everyone's popping in here to the group chat. Nice to see everybody. Say hi, say hi. Welcome new followers. Awesome. Welcome all new followers. Nice to have you all here. Check out the text channels. This is the best place to find me. Remember, I will not initiate or solicit, just to be safe. Okay. All right. So I'm seeing some Forex stuff. Yep. Pound yen. I saw that pop up a little bit. We could do a couple of requests. Forex market's really quiet today. I mean, pound yen. I mean, this is the analysis that I have on my chart here. If I'm going to be a seller on the pound yen, it would have to break this structure right there. So if we have the pound yen heading a little bit lower and we take out a level, then yeah, I'd look at a great looking head and shoulders trade, right? So let me draw this out. Just kind of use some textbook. So take your lows, connect the dots. If the pound yen can actually fade that move lower, take out that low, test that low, give us a crown or head and shoulders, I would sell that trade, stop loss above the swing high, and then look for a wave 3 for symmetry, look for a pushback down, possibly come back and retest all the support. I don't know if that's going to happen though. I really don't know how much stronger the yen is going to get in a sustained way, because unless we see, and this is my barometer for the yen, the dollar yen has to be something that's going to move way, way lower. Right now, the pound yen sitting here, or the dollar yen rather, sitting at these highs. Look, to me, after this crazy rally that we saw from March 2020 into present, so that rally from March 2020, big pullback for efficiency, push up here, pull back, push up here, pull back, push up here. Look, if price gets tighter and tighter and tighter, you can see what I'm doing here. Where's the sellers? The best place to be a seller is with really obvious confirmation. It's way down here. Who cares about the top or bottom right here? Who cares? This is not the place that I want to say, this is my direction. This is my line in the sand. If I take a trade right now, I've got to have a stop loss, right? So we can go sideways and we can still have a, 3, 4, 500 pip choppy range without a lot of decision. But if I'm a seller, sellers take control here. If I'm a buyer, buyers take control here. So the dollar yen to me is my gauge for all the other yen pairs. If the yen's going to get weaker, you'll see it on this chart. If the yen's going to get stronger, you'll see it on this chart and you'll see it across the board as well. So I'm not sold on yen being strong just quite yet, because as we mentioned earlier, this would be an unraveling of the carry trade, which right now, low volatility in the Forex market, low volatility in the equities market, everything is melting up higher. The momentum chase is kind of paused for right now. I'm not saying that Nvidia can't go to $1,000. I'm not saying that the SPY and other, instruments can't go higher in the broad market. But what I am saying is, in this lower volatility environment, carry is king, right? Meaning that it just favors the resiliency of low volatility yield. And this is in the Forex market. So until we start to see, currency pairs moving 150 to 200 pips a day, it's low volatility. The dollar index is sideways. The yen, to me, on the dollar yen is choppy and sideways. I'm still not quite convinced we've got this big breakout. But the bulls above 152 take control again. And this is where everybody's stop loss is located. So could we free up that liquidity by breaking through that level and going higher? Yes. Could we also free it up by spiking above and then crashing below? Sure. Anything can happen, right? So I am ready and I'm flexible, which is why my trading room is called the Flex Trading Room, because whatever happens, I want to trade it. But I don't have a good trade right now. I don't have a good trade in the pound yen. I don't have a good trade on the dollar yen. I don't have a good trade on the dollar index. So I'm waiting. The trades that I like are the trades I'm in. I'm long against the Swiss. And I'm even short the Swiss yen with a break-even trade. I shorted at 169, and we're trading at 167.70. So I'm about 130 pips or so. But I'm break-even on the trade, so there's no risk on it. Everything else, long against the Swiss, on the Aussie, and the CAD, and the Euro, and the Pound, and the New Zealand, and the dollar. And I'm sitting on about 6,000 pips of profit, and I'm going to keep holding it. So I'm going to keep trading what's working. I'm hoping we get a little bit of volatility coming into next week as we kick off Q2 and we get some news. We'll find out. Good, bad, and different. We'll find out. Okay. Euro dollar, Jackie. I mean, you can look at the dollar index and see the same thing. So dollar index, the DXY, pretty hard to determine what this thing wants to do. So if I look at the dollar index, you have to remember that the euro dollar is the most heavily weighted portion of that. So euro dollar to me is still indecisive. That trend line I had drawn originally, but I really don't like it. I don't think that we have any clear decision outside of this. It's the cleanest or the least dirty shirt in the laundry. And so if we see the dollar getting stronger, we see the euro dollar heading lower. I will say this though. If the euro dollar heads down to 104, 105, I'm a buyer. In my opinion, I'm a buyer. Okay. If it comes down to worst case scenario, we have high to low, maybe a high to low here, and I find a big pocket level. But I don't think that we're going back to below parity. I think that after that, test of parity again for the first time in 20 years on the euro dollar. I think parity would be pretty well defended by bulls. I think also this kind of 102 to 103 zone if we even get there, but I'm making it a little bit noisier than it has to be. If this dollar gets a little bit stronger and the euro dollar heads down, I really like this 105, 104 zone to look for a trend line break and look to start buying back again, even if we went to the middle of the range. If that's all we did was traded it back to the middle of the range, I'd buy it low. I'd take profit up here, right? If it drifts higher, fine. Maybe gets a little bit more complicated. But coming off of this level, remember, this swing, if this is a wave 1, all this could be wave 2. All of it. And if we get a wave 3 on a weaker dollar, then that should push the euro dollar higher. I just don't think it's ready yet. I think that right now, low volatility, favoring carry, favoring swap, the euro dollar, it's one of the most liquid currencies in the world. So that's the hard part too, is it's going to be a 50, 60 pip day mover. And what I don't really want to do is buy the euro dollar and have to pay negative swap for it every day. That's why I'm not doing anything on the yen unless I really believe that the yen's going to get stronger, which I don't. Do I trade the peso? I did back in the day. I traded the peso a lot going into the 2016 election. 2014, 2015, 2016. I traded the peso a lot. This was the Trump trade. This was crazy. I don't remember. I think it was here. This was the Trump trade on the peso, and then I shorted it, and then we had some equal lows. I took some stabs at the peso. COVID, I'm glad I didn't deal with the yen or the peso because that was like a 60,000 pip move in about a month. So after COVID, I just kind of stopped trading it. Once I saw like the Turkish lira was breaking and the krone and the South African rand and all these exotic pairs, and plus, they're higher spreads, they're more expensive, the margin increases, they're illiquid at times. So anyway, the peso's been a great carry trade as far as unraveling, once we had this big resistance. But I haven't traded it in a while. Yeah, it's been a while. Okay. So anywho, I think that's it. I love being here. It's nice to talk to everybody. Nice to see some new followers join the community. If you need anything, let me know. Hit me up in the Discord group. Just know it's me, right? And post it in the free group chat. I'll respond. I watch it every day. It's on my phone. It goes with me everywhere I go. And I'm just here to help. So, like I said, if you're interested in learning more, you want a crash course, the private instruction I think is a great way to get on track with some, address some problems, talk about your strategies. What can you do better? I'm just going to share all my experiences and hope it helps. And typically it does. Okay. So that's it. Happy Friday. Have a great Easter weekend. We'll be back next week. And I'll see y'all soon. All right. Thanks. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.